This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Last day of the week. So, what do you guys say? TGIF, right?
It's going to be a long Friday, though.
Long Friday. We're coming to you from the CNBC-TV18 Motilal Oswal studios. As always, I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi.
Hi, morning. By the way, today's that weekend, right? When you have the new releases. There's Oppenheimer that releases this weekend. Yeah. There's Barbie. So I agree that's a long working day, but post that is going to be a pretty good weekend.
Well, indeed, but it's going to be a hard working Friday, Sonia. You know, just
look ahead, Nigel. I mean, it's a state of mind.
Yeah, I just need to pull through the day.
By the way, our producer Anurag, I don't know if he wants me to reveal this, is I think going for some 12:30 in the night show, morning show, whatever it is, right? I mean, for Oppenheimer.
Yes. Even I've booked, tomorrow.
Tomorrow.
Yeah, so
it's going to be a big one.
I mean,
people are already saying it's just releasing and they're saying, well, it's one for the Oscars and stuff. I don't know.
but Nolan fans, right? I mean,
absolutely. Yeah. I'm one. So
am I. Totally.
I plan to watch it. Well, we got lots lined up, right? Earnings which came through after market hours yesterday. A lot of earnings which will come through today. So let's tell you what you need to know. Infosys is the first thing that I want to quickly mention before I get to global stuff. I think Infy may, in a way, prevent the Nifty from hitting that 20K mark, at least at open. I mean, if it had not been for Infosys, I think we would have run it this morning. Yesterday, at the day's high, we were just 8 points short. Just 8 points short to that 20,000 level. And it would have been, I mean, it still would be, I think, the fastest 1,000-point rally from 19,000 to 20,000. We'll see. But it's disappointing. The numbers are disappointing. ADR was down 8.5% last night. The stock has got about a 6% weight. The weight's come off quite a bit, by the way, over the years, but still got about 6% weight. But the bigger risk is that the market kind of starts to turn its back on other IT stocks as well, at least tier one, right? Because numbers from pretty much all large top IT companies and the outlook from all of them has been underwhelming, has been poor. But but markets and stock reaction has looked through that. Just look at what happened last week. Look at what's happened this week as well. Stocks have been resilient, maybe a little lower recently. But will Infosys change that, right? With a shocker in terms of the downgrade to its growth guidance for FY24. We'll discuss more on this a little later. To add to the pressure on IT stocks, US 10-year yield surged last night. They were up about 10 basis points. And they were at about 3.85%. That's a big one. We've not seen a 10 basis point jump in a while. The dollar index is creeping up a little bit as well. And that's just about 101, almost 101 now from 99-ish point something kind of levels. So last 2 days, it's moved up. But the dollar is moving up because data is coming in stronger. So we had that inflation surprise on the downside, which markets loved. But the initial jobless claims, they were lower than expected, which is good news. And home prices, I mean, the home sales data itself was a little underwhelming, but the prices component was stronger than expected. And that's the reason why the dollar rose. The markets were a little off. I mean, you got the S&P, which was down about 0.68%. The NASDAQ on your screen was down a full 2%. There were big stocks, right? Tesla, Netflix, etc., which we were discussing yesterday. They had the maximum pressure. Those stocks lost between 8 and 10%. The Dow was up about 0.5% or so. So the picture is a little mixed as we start this morning, not just because of the Infy numbers last evening, but also the fact that overnight, I mean, it's not an up market that you're looking at. It's a down market. But you had to put this in context. I mean, I think the S&P has not had more than a 1% fall in almost 40 days. So you got a 0.68% fall. So nothing to freak out about. The NASDAQ fall perhaps is a little larger, but those are outsized cuts coming in from those names that I said. All right, so what are we looking at? The upside is open. I mean, and it's been a strong market where the dips are getting bought, and there are those dips which have come through this week. Supports, let's look at that. The first support comes in at the 19,715 level. I mean, it's an hourly exponential moving average, but even this is so far out. We are almost at 20,000, but that's, the first number which you can look at as a support. Bank Nifty closed above the 45,905 level, the level we've been indicating. It basically shows that the move is extending. It was a strong day there. The upper Bollinger Band for the Nifty band stands now at 46,650. So, keep an eye. That's just about, I think, 500, 600 points away. And on the way down, the low of 45,281 should not be broken. So, just some numbers to work with as we start another session. But I reckon a lot of the conversation would be around IT and what it would do and mean for the market.
Oh, absolutely. And what are the odds, right? I mean, when you're just 20 points away from that milestone, boom, comes this negative cue to sort of spoil the party completely. So today, perhaps that's something that will happen. The big question in everyone's mind, you're asking that question, I'm asking the same thing. Will Infi really derail the market up move? On Infi particularly, of course, we all know that there was that sharp cut to the FY24 growth outlook. But the management saying that there is softening of discretionary demand is a big thing. Does it restrict itself only to Infosys? Is it a company-specific issue? Is it extended to the entire sector? That's the big question that we need to ask ourselves. They also talk about how deal start dates are getting delayed. So, if that is the case for the entire sector, then one needs to rethink what's happening, with the sector, because many of these stocks have rallied quite a bit. So that's on Infosys. A lot of downgrades come in. In fact, Macquarie has downgraded Infi to an underperform. They have a target price of 1130, which is a big downside to the current market price. Many such brokerage views, we'll come to that later. Apart from that, HUL also disappointed. So there's nothing to latch on to, this morning in terms of positive cues. HUL barely 3% volume growth. There as well, the management commentary was not inspiring at all, saying that competitive intensity is rising. So these two could sort of hurt the market sentiment today. Now, if you talk about the global markets, there too, if you look at the Nasdaq's performance, right, the Nasdaq was down 2%. Netflix, Tesla disappointed in their numbers. So that seems to be the theme both globally and locally, and that could take the markets lower. The only silver lining is that foreign investors continue to pump in money thick and fast. So yesterday, once again, there was almost 3,400 crores of buying. And today you have Reliance that comes out with numbers in the evening. It's expected to be a muted showing, so that may not provide too much support to the market either. And tomorrow you have ICICI Bank's numbers. So could that be the solace for the market? Could that be the balm sort of for the wound? We'll get to know, because the run-up has been pretty sharp for ICICI Bank. The stock is up almost 13-14% from the lows in March. And, the market itself is up 20% since March. So would be interesting to see if there is a dip, do the dips get bought? Because so far, buying the dips has worked out very, very well. So, ex of Infosys, will the dips get bought? Time will tell. But for now, today could be a bit of a tricky day.
Well, that's right. But we are waiting for 20,000, right? 20,000 got hit. Not on the Nifty, not even on the near-term contract. The Nifty futures, the August contract. Because yesterday, the Nifty futures, the near-term contract went into a discount actually towards the end of the trading session. So there was some shorting at the top. And Infosys will serve as the reason for the market to pull back. We're looking for some reason. Infosys is that reason. And don't mistake HCL Tech's reaction with Infosys. For HCL Tech, the market was positioned for a weak set of numbers. And that's why we did see a bit of a bounce. This has come out of nowhere. Infosys has rallied from the recent low. So Infosys is going to be the sow point in today's trading session. It's going to be a test for the bulls today. 35% of the Nifty will be reacting to earnings itself. That's two of them yesterday, Infosys and HUL. Today you have Reliance, JSW Steel, HDFC Life as well as Ultratech. And tomorrow ICICI Bank and Kotak Mahindra Bank. So between all of them, 8 stocks close to 35% of the index will be reacting to numbers itself, or will be bracing for numbers that we're getting post-market or over the weekend. IT stocks, well, they account for close to 14% on the Nifty, and they could pull back a little bit. Remember, out of that 14%, you have 10% that's between TCS and Infosys itself. And the FI long position, I've been mentioning this, it's moved to the highest ever that we've seen. That's a net long position, longs minus shorts. Who could bat for the bulls then? The Nifty Bank, well, that's been in excellent form. So can the Nifty Bank put its hand up? Remember, it constitutes around 20-29% of the Nifty as of now. And L&T, they have announced that crucial buyback. Market want to know what they're going to do with their cash. And can they take the ROE to around 18%? So that will hold in good set. So 31% of the market, you have to bank on them batting for the bulls today. What do the FIs do in the F&O market? Well, yesterday they added long positions. Close to around 3 long positions for every 1 short position. And the long positioning goes to around 71%. You'll say, what's to worry? We have seen 80-90% both on the long and the short side. The problem is that when the net long position goes above 1 lakh, we've traditionally seen a bit of a pullback. And now the long positioning is at around 1.04 lakh contracts. On November 30th, it went to 1.02. And from there, we did pull back a few hundred points, actually. I'm not saying that's going to happen this time around, but that's normally a word of caution when the net long positioning moves over 1 lakh contracts. 2 big strikes in the most active, and the highest open interest are at 19,800 put and the 20,000 call. So just plugging in the numbers then, Given that the 19,800 puts, some smart money would be writing that. You're counting on that 19,750, the first support zone for the bulls. And the bulls will look to buy the dip. But will that bounce last? That's going to be important because till now, buying the dip has worked out. Crucial that the Nifty, though, holds on to the 19,750 mark. Till that happens, you'll see, yes, the uptrend is still intact. And we're talking about the Nifty, we're talking about the IT stocks, but I think the bigger test will come from the small and the mid-cap space because that's where the bulk of the money has been made. So that will be the bigger test today. Can the mid-cap and the small-cap indices continue to outperform, continue to hold when up, or at least don't see a big gash in today's trading session? For starters, though, the Nifty suggesting a 90-point downtick. Let's see how it goes. Infosys going to be the sore thumb, and buy on dip thesis is going to be tested.
Okay, well, lots to watch out for today. There are big numbers, even in the broader markets, that will be reacting to, their earnings that came in post-market hours. So we have our hands full. Without wasting any time, let's kickstart the show. First up, Pramod, the Amte of Incred Capital, says the sharp run-up in the Nifty is impressive, but a big beat by mid and small-cap indices is an area of concern. He raises their Nifty target to 21,103 from 20,330 earlier. For recent consensus EPS upgrades and roll forward, he retains their overweight stance as forward PE valuations is comfortable near the 10-year mean and India's forward PE valuation premium is at a 7-year mean level. But he adds there are some downside risks such as uneven rainfall distribution, fuel inflation and IT sector hiring slowdown hitting urban consumption.
Okay, well, let's get you some money market views now. This is Lakshmanan V of Federal Bank who says that the dollar index is languishing around the 15-month low and in absence of any fresh trigger, the dollar INR is trading sideways with very low volatility. He says the focus now shifts to an action-packed week ahead where the Fed, ECB and the Bank of Japan are slated to meet for their respective monetary policies. Yesterday, he adds, the People's Bank of China held its benchmark lending rate steady, indicating that they wanted to keep the yuan slide in check, which further helped the rupee. He expects the rupee to trade between 81.68 to 82.28 to a dollar till the FOMC meeting.
And on the bonds, Lakshmanan says the 10-year benchmark bond yield consolidated in the 7.02 to 7.12% zone and is expected to continue in the same band. He says the FOMC meet will be keenly watched before we see any kind of directional move.
Well, we have a lot of stock-specific action that we'll be tracking for you, and we'll get to that in just a bit from now in our special Top 10 segment. But let's run you through the list for now. We're looking at L&T, United Spirits, Thunderla Platforms, IndiaMart, Union Bank. They are all the stocks on the back of positive news flow. While on the flip side, you have some large names that will be reacting to negative news flow. Infosys, HUL, Dalmia Bharat, Persistent Systems, and Mphasis. Okay, well, we've got Harold van der Lind of HSBC joining us. He's head of Asia Equity Strategy. Thanks very much for joining us, Harold. It's always a pleasure having you with us here on CNBC-TV18. Prashant this side. The market's been on rocket and rocket boosters, Harold, here in India. We're almost at 20,000 on the Nifty, and I think the sell side at least is finding it tough to keep up, raising price targets, multiples. What do you reckon the near to medium term trajectory is going to look like, Harold? Will the pace continue? Is it going to be an up and up market in the second half as well?
I'm afraid it's going to be an up and up market, yes. And there's a couple of good reasons for that. The global macro is turning in Asia's favor, and India is no exception in that regard. We see that bond yields have come down. You guys were just talking about overnight, they've moved up a little bit. But that's really a day-to-day. If the Fed itself is seeing interest rates coming off, the market is anticipating this as well, and bond yields are starting to reflect this better and better. And as we go deeper in the year, that's going to help equities in the emerging markets. I think also, and this is maybe globally more so, that a lot of people are still underweight on equities and haven't really participated in the global rally that we've seen. A lot of people had reasons not to, for example, go into US equities or global equities. At the beginning of the year, we spoke about banking problems in the US. Then there was a debt ceiling. So there were excuses for people to wait on the sidelines. And now that they see that the market goes up and the global macro is in favor of global equities and Indian equities, as I said, no exception to that, you see that gradually they're coming back in. So I think we're going to break that 20,000 level that you were just referring to. Maybe not today, but in the not too distant future, I suspect.
Okay, so I mean, we're not too far away, right? So it's going to happen for sure. Just that there are some in the meantime. Harold, hi, good morning, and thanks for joining in. You've been a long-term long-term observer of what's happening in the Indian technology space. So I just wanted to talk a little bit about that. The Infosys numbers were not just weak, but the company has cut their guidance. And they've also talked about how discretionary spends from clients have gone down and there are delays in decision-making and in deals starting. Does that raise some alarm bells for you as an investor in the IT space? Or do you think this is par for the course given how challenging the environment is?
No, it doesn't. It's not alarming in my case. I think this is something that we've, I wouldn't say anticipated necessarily so, but if you look across the region, you see that some of the exporters are becoming careful. In Taiwan, we see some of the semiconductors companies saying, hey, order flow is starting to weaker. We see a little bit coming out of some of the Korean names as well. Not the big semi names there, but some of the other exporters. We know that there's pressure in some of the car markets, auto markets, because of intense competition. And overnight, we've seen some of the US companies struggling with that as well. So I think this fits in a broader picture that global demand is weakening. And of course, some of the IT companies in India are very much exposed to the very similar dynamics. Maybe the industry dynamics could be different, and what happens with their individual clients is here and there different. But the overall demand picture is one of weakening, and therefore you want to focus on domestic-oriented companies, domestic-oriented sectors, and that's banks and the consumer names and these sort of things across Asia and India as well.
But there's a problem here, right? Even in the domestic market, things are weakening. I mean, we have one of the largest FMCG players, HUL, talking about just a 3% volume growth in the quarter gone by. What do you do then?
Yeah, I saw that. No, yeah, that's right. This is something that we need to keep an eye on, because at the moment, the export sector looks weaker than the domestic side. But also, if you look at the earnings profile in the whole region, a lot of the analysts are hinging upon good numbers in the second half of the year, in particular in China, to be honest, but in Korea, Taiwan as well, and India to a certain extent as well. So people see an acceleration, and we're now seeing signs that, yes, the exporters are not doing so well, but the domestic companies, I would have expected them to continue to do well. Now, so we got to figure out what you were referring to. Is that a staple in India that is a one-off, or is that a temporary thing, or is this going to spread into the rest of the region or the rest of India? And therefore, is the domestic story going to be weaker? Now, I was actually in Tamil Nadu about 2 weeks ago. I drove around and I was on highways and then had to go off the highway and going to smaller roads, going through the paddy fields. I was visiting temples there. What that illustrates to me is that the infrastructure story that's being built out in India, that is on its way, and there's plenty of growth that's going to come from that over the course over the next couple of years. So I feel very confident if I look farther into the future, but maybe near term, we're going to see domestically a bit of weakness there as well. So we're going to keep a close eye on that. It will be interesting, an interesting story in the second half of the year.
Harold, we've seen a steady drumbeat of kind of, how do I put it, hot India headlines, right? You had Capital International, which came out with that note. I don't know if you saw it. One of the largest global investors asking the question whether this is going to be India's decade. There have been stories in the Financial Times, an opinion piece from Martin Wolf recently, and so many others. I mean, just a few that I remember. I'm just kind of wondering, you of course been a long-time India watcher, but for someone who's not, I mean, who's sitting, who's never visited, who's not sort of intimately aware with India and the market stocks, what does it do? I mean, does it kind of build momentum to allocate more to a region?
Yeah, yes, I've seen those stories as well. And I do hope for India that this is going to be India's decade. Absolutely. I do also think that India has got big challenges that it needs to deal with over the course of the next decades. And that wouldn't be a surprise to you either. I mean, education standards in part of the region could go up. A lot of people still struggle with daily income. We need to see these things improve. But a lot of the right policies are being put in place. That's absolutely right. But also, I think what we have here is that increasingly, people are disappointed with what's going on in China. The feeling was there was going to be a good year in China. That's not happening. And they want to move somewhere else. And India is, of course, a great place then to go to. But I want people to be positive on India for Indian reasons, not for China reasons. And I think that fits that particular story that people are building, maybe sometimes also to justify themselves. There's good reasons to be in India. It might well be this India's decade, but it shouldn't be because people don't want to be in China.
Okay, well, that's good to hear that despite everything, this is going to be India's decade. And I'm sure our viewers, investors, stakeholders are all looking forward to that. Harold, always a pleasure speaking with you. Thanks a lot for joining in. And
have a good weekend.
Time out.
Enjoy the movie.
Yes, you too. Oh, yeah, thank you. Are you planning to catch any of it?
Well, I was just talking with Prerna, which is my my colleague who happens to be in India at the moment, and she told me I should be watching that movie from Christopher Nolan. So I might be doing that well over this weekend.
Okay, everyone's going to be going for
that.
That's right,
yes.
All right, have a good one. Thanks a lot.
I'm not quite sure if I'm in the Barbie kind of audience. I'm not quite sure if that's really catered to me.
Okay, there's something for everyone this weekend, right? Thanks for joining
in. That's right.
All right, that's the word coming in from HSBC. Let's do one thing. Let's dip into a quick break. So many stocks to discuss. Movies may come in later, but before that, we have the big movie, right? Infosys, HUL, all of that lined up in just a bit. Stay tuned. Okay, let's get straight to it. Infosys is definitely top of mind post the guidance cut. Reema's joining in to give us the latest on that. Reema, over to you.
Hi, good morning. So Infosys ADR was down 8.4% yesterday. So that gives you a sense of the market reception for Infy's numbers. And plus, in the Indian markets, remember, Infosys had rallied nearly 9% since TCS and HCL Tech reported their numbers last week. So in the run-up to Infosys, the stock had done very, very well. Now, what's disappointed the street a lot is the sharp cut in guidance. The company was earlier guiding for a 4 to 7% top-line growth. They have brought it down to 1 to 3.5%, which means India's second largest IT company is going to see very low single-digit revenue growth this year. The reason for the guidance cut is some of the deal start dates got delayed, and secondly, the softening trend in transformation projects, discretionary spend. Q1 numbers are in line on revenues, on margins, on deal wins, so there is no concern on Q1. But despite a strong Q1, a steady Q1, the company has slashed its growth forecast. Most analysts consequently have lowered their EPS estimates between 2 to 4%. Nomura is the one who's downgraded the stock to a reduced and further cut the target price to 12.10. Back to you.
Thanks a lot for that, Rima. We'll be shortly joined by Sandeep Agarwal of Sovilo Investment Managers to decode the Infosys Q1 numbers. But there was another disappointment as well from the Nifty pack. HUL, Mangalam, tell us more.
Well, HUL was a miss, no two ways about it. In fact, and the miss was led by the top line itself. The revenues were slightly shy of our estimates by about 2%, and that 2% was explained by the weakness that we saw in the volumes as well. The volumes grew by about 3%. The street was working with a number of anywhere between 5 to 6%. As a result of which, the EBITDA as well as the net profit were below expectations. In terms of internals, the gross margins, yes, expanded more than the street expected, 260 basis points expansion out there, but the company has plowed all of that back into higher other expenses and higher ad expenses as well, and as a result of which the EBITDA margins also missed street expectations. Home care business saw 10% growth, no problems out there. It was the beauty and personal care which was below expectations, and food and refreshments as well were impacted by low sales of ice cream as well as low sales in the tea and coffee business, flat volumes in that business too. For those looking at positive commentary from the management, that did come by, but with a lot of riders. They did say that consumer sentiment is improving and gross margins are likely to improve, but along with that, competitive intensity has also increased, and as a result of which they will plow back all those gross margin expansions into ad spends itself. So to that extent, the street does not expect a lot of margin expansion going forward despite the gross margins for the company to expand.
Okay, so two misses, and let me go with the third miss then. Dalmia Bharat as well, that was a miss. One of the first big cement companies to come out of the numbers. It was disappointing. Top line was in line because volumes were in line. You had the EBITDA number that was a miss of closer around 10%. For some, it was closer around a 15% miss on the EBITDA front. And margins as well did come sharply lower than what the market was working with. The key reasons were realizations were down by closer around 2% on a quarter-to-quarter basis. Remember, they have exposure in South as well as East India, where pricing wasn't great. And power and fuel costs, everyone was baking in some cooling off in cost. That didn't happen. On a quarter-to-quarter basis, it's up by close to around 4%. We'll have to watch why exactly this happened, because the management, the last con call said that it'll cool off from there. And that's what led the EBITDA per ton on a quarter-to-quarter basis as well. It's lower, which is a disappointment. The net debt to EBITDA, well, that rose up a little bit because they've been expanding capacity. And the last 1 month, the stock is down close to around 10%. So maybe some part of the street was bracing for a weak set of numbers, but that's a weak set. Moving to L&T. Well, that's one of the stocks that could back for the bulls today. Remember, it has close to 4% weight on the index. The board will be considering a special dividend as well as a buyback when they have their board meeting on the 25th of July. For that, they have fixed the record date as August 2nd. How does this help? Remember, they have that plan of taking the ROE to around 18% by 2026. So if you buy back some shares, it will reduce the equity, which will obviously help the ROE. They have cash of close to around 24,000 crores approximately. And Citi, they are opened up a 30-day positive window for it. They believe that the stock could outperform in the near term. So that will open up in the green.
Okay, well, Rima's back with us to talk about how Persistent Systems and Mphasis reported their numbers this time. Rima, over to you.
Let me start with Persistent. It's a steady quarter, but there are no positive surprises. Revenues went up by 2.9% quarter-on-quarter. EBIT margins largely steady, down 40 basis points QOQ. There were some celebration costs that the company undertook because they achieved $1 billion of revenue. So there were some one-off cost items which impacted the bottom line. Deal wins are slightly down quarter-on-quarter, but in line with the growth rates. But considering that these are okay numbers, factored in, baked in, and there are no positive surprises, I'm going to go with red for Persistent given the mood in IT post-Infi. Mphasis is weaker than what the street was anticipating. In fact, it's the third consecutive quarter where the top line for the company has declined. In the current quarter, revenues are down 3.4%, more than what the street was anticipating. The problem is their BFS vertical, which is half of their revenues. BFS this quarter has seen a QOQ decline of 8.8%, year-on-year down nearly 15%. Other internals are healthy. Margins are in line with street expectations. The positive in the numbers is the TCV, a solid jump in their TCV at more than $700 million versus $300 million. Deal wins are strong, margins are steady, but revenues continue to get impacted. Back to you.
All right, Rima, thanks very much for that. And you'll hear from the Mphasis management today at 9:50 today. Actually, lots of IT companies over the next 1-2 hours or so. Okay, United Spirits reported numbers as well. Surabhi is here with details on this one. Surabhi, morning.
Morning. So United Spirits was not a disappointment. The numbers were ahead of expectations. It was driven by over 20% revenue growth in their premium segment and over 10% volume growth in their premium segment. And on an overall basis, Q1 revenues were flat. But if you adjusted for the sale of popular brands, the sale growth was over 17% on a year-on-year basis. Gross margins show a sharp expansion, and the benefits of the better mix, that is more premium, is playing out. That has flown down to the EBITDA as well. The margins were up by almost 500 basis points, significantly ahead of estimates, and this was also aided by lower ad spends this quarter. Overall, very strong numbers. Premiumization play is playing out, but we'll also watch out for some additional commentary in their con call today.
Right, cheers to that, Surabhi. Thanks a lot for that. Well, let's hop across to Rima. Rima, tell us about Tanla and IndiaMart.
Let me start with IndiaMart. It's a good quarter. Revenue growth up 5% QOQ. Year on year, it's up 25%. Margins have improved very sharply. I think margin performance is what the street is going to like. Margins are 27.4%, and plus there is a buyback. It's a tender buyback, 500 crore of size, with at a maximum price of 4,000 rupees, so significantly higher than the 2,911 where the stock closed. So going with green for IndiaMart. Tanla platforms had gone through many quarters of very sluggish growth. If you pull up the trend chart, you would see the revenue growth for the company over the last couple of quarters was either declining or just about growing. But this quarter, revenue growth has bounced back both QOQ and year on year, and the margin performance too for the company has been resilient. So good quarter from Tanla platforms. Back to you.
Okay, all right. Thanks very much for that. By the way, the IndiaMart management will also be joining us to take us through the numbers. That's coming later today. Union Bank is the next one in focus. Public sector banks have been doing well. Abhishek is here with details on the numbers. Abhishek, morning.
Morning, Prashant. So it's a strong quarter for Union Bank of India. The annualized credit cost for the quarter was at 0.97%, perhaps the best that I have seen in last 8 years or even more. Cost to income ratio is the lowest in last 14 quarters, coming in at 43.66%. However, on the flip side, CASA ratio, that's declined to about 34.6%, which is one of the lowest in last 12 quarters. Asset quality, one of the best that you are seeing in last 7-8 years in terms of gross NPA ratio or net NPA ratio. NII is strong, growing at 16.6% YOY and more than 7% sequentially. So the profit growth is robust at 108% YOY and about 75% sequentially. One of the best return ratios, ROA and ROE, at 1% and close to 19%, as perhaps the best that you are seeing in last 8 years or even more. Back to you.
Okay, thanks for that, Abhishek. Well, we'll be interacting with the Union Bank of India management at around 10:15 a.m. later today. Well, let's do a quick recap then of all the top stocks we just discussed. Stocks with positive news flow include L&T, United Spirits, Tanla Platforms, IndiaMart and Union Bank. While stocks with negative news flow include Infosys, HUL, Dalmia Bharat, Persistent Systems and Mphasis.
Okay, so many stocks to discuss, but let's also find out what's happening in the world of commodities this morning. Manisha Gupta is joining in for a quick roundup there. Manisha, what's happening there?
Sonia, thank you for that. Well, I'll start with the dollar index, which is trading above 100. So we've seen nearly a percentage point of gain coming in for that one in this week. But even in spite of that, we have seen good gains across commodities. So the crude oil prices are headed for a fourth week of gains. We've seen the natural gas prices gain up by 6% overnight, and that one is actually up nearly 10% on this week. Copper prices gained up 1.5% overnight. The China alumina prices are trading at a one-month highs as well. So strong going when you look at the non-agro space. Within the agro commodities as well, this week has thrown in a lot of surprises. So whether it is about, Russia pulling out of the grain deal, that has led to gain in prices. But the major gains clearly come in for the palm oil prices, which is trading at a 4-month highs right now. And after the India banning non-basmati rice exports, we have seen the global rice prices gain up to a 7-week highs. So we are looking at a 4% of a jump up in rice prices also for this week.
Okay, well, Manisha, thanks very much. We'll come back to you for more on commodities a little later. We'll take a quick break here. Sanjeev Bhasin, director at IIFL Securities, will join in for a quick check on markets as he sees it. A little later after that, we'll have Sandeep Agarwal, fund manager at Sovilo Investment Managers, to talk about Infosys. That's the big one this morning, and of course the impact it will have on the IT space. Stay tuned.
Welcome back. You're tuned into Bazaar Morning Call, and we got a very special guest with us here in the studio. Sanjeev Bhasin, Director at IIFL Securities, joins us. Hi, Sanjeev. Welcome to the studio, and welcome to Mumbai as well. I think you came in late last night. And good call on the Nifty. We are almost at around 20,000 odd. But what's the outlook from here on?
Well, congratulations to the three of you. The trio's roaring, and who's to question the market. So, Nigel, it just tells you that everyone in the last 2 years has been saying the retail investors will run away. Actually, it's just the retail investors who made money. We can always doubt the intent of the rally or not. It is just the SIP which has been a unique instrument. And Sonia, that is what has made money.
Absolutely.
For the investors, an asset class called equity is making money. Gold is at 62,000. Real estate is touching all-time highs. Only because you own the asset.
Absolutely.
You tell me one thing, why is gold 62,000? If I just asked you. It's not because of us, it's because of you. Om Sarva Mangal Magile Shive Sarvat Sadhika Raste Shane Trambike Gauri Narayani Namaste Se. You are the Narayani, you are the Lakshmi who has held gold. You in the sense, the lady of the house. You didn't track gold every day. If it was left in Prashant and Nigel's hand, they would have sold it and bought JP and
Nigel, what a low opinion of us.
Not them, it's the men. So if you owned Infosys or you own TCS and you own Lever.
You know, I want to correct you there, by the way. It's a misconception that women prefer gold. Women are into financial assets a lot more these days than
No, it's the hierarchy.
Think, you know?
Sonia,
it's of course the past.
What comes in, you preserve that. I'm not saying, I'm saying the holding period. If your mother and your sister and your daughter, you preserve it. You don't let it go out. It's emotional.
But you know, you brought this point out about the equity cult growing, right? I mean, the percentage of people investing in financial assets now has gone up dramatically, maybe with the onset of social media, etc. But do you think that this is something that can take the markets much higher from here? Something that even Prashant was asking you a while back. Is it going to stop now? Do you think there's some consolidation on the cards? Or is it just a one-way rally?
So, Sonia, two simple things. One, this cult is not going to change, maybe for the next many decades, because you all own real estate, which takes 30 years to create. Fixed income is not beating inflation, and gold is emotional. The only missing class was equity, where a 2,000 rupees SIP is there. And the people who have decided to make that an equity class are going to remain put. India will be an expensive market. I'm not saying you can keep running away at the speed which we have. I mean, I pray to God we do that. But in, like I said, there is an old adage, ignorance and arrogance go hand in hand. And you are seeing a bit of both. You are the left out feeling is so large that you will buy anything. And the arrogance is the money which you have, which was parked in China or whatever. So enjoy the party while it is. But yes, definitely we are overstretched by all ballparks. I had said 21,000 by the end of the year. Maybe we have an early Diwali by next week, I guess.
I mean, I thought 20,000 by Diwali was to 21. But Sanjeev, you're good at catching turning points also. I mean, the last time we spoke, I think you were going on a holiday, there was a dip, and the dip did come. I mean, although it was smaller than what we were anticipating. What's your sense? I mean, near term, is there a bit of a turning point? Many are asking that question. That's why I'm putting it to you. Or you think, I mean, no real reason to worry?
Prashant, there can be a proverbial dip, but you cannot have a perpendicular or a parabolic rally. It has to give some breath. Otherwise, again, then the adage will come that you'll see a 5% fall maybe for a week, and that will shake out the... So be there. It's easy to say that you are in or out. It's only the people who have stayed put, and the same people who were talking of 15,000 are now talking of 21,000. So the markets change at a dime. We don't know what will trigger it, but it's not just here. Look at the US. Now, I will not argue on the on the extent of the rally, but all I would say is we will wait for results. We need macros to be playing out proper. There is also the humdrum that maybe the Fed does something or a pause, but he is going to raise rates. So all that little bit is going to be played on the macro front. We've had a sweet rally. The money in the last 3 months is more than you made in the last 3 years.
So maybe, stay in, but tighten the parameters of what you want to own. I mean, have tighter filters now, right? I mean, in terms of quality and other parameters.
Correct. And now, like you said, there are days when the outperformance comes, like yesterday, Bank Nifty caught you on the wrong side. And these type of changes will come there. But the underlying remains, if you have equity as an asset class, you are riding the wave.
At the end of the day, right, every bull market, I think, is predicated on earnings, right? Improvement in earnings. But this time, we're getting some hurdles. So I just request you to stay on because we have Sandeep Agarwal, who's also joining into this conversation. He has tracked the IT sector for very long, and Infosys, of course, will be the stock of the day on the downside. Sandeep, what did you make of the numbers, and more importantly, the management commentary where they talk about discretionary spending getting hurt?
Good morning, and thanks for having me on the show. So yes, absolutely. If you see the quarter numbers, as you would have seen all the reactions and reports also, there was not any big miss on the numbers. So quarterly numbers per se were looking good or in line, I would say, not if not good. But the biggest challenge is that, this kind of guidance cut within 1 quarter of getting into the year is something which is alarming, because see, this is not a situation like COVID, or this is not a situation like Lehman crisis where something has changed overnight, right? There is a fear of soft landing, of recession. There are other concerns, but they don't warrant that. They were there 3 months back also, and if at all, they have not increased since then. So basically, what you are saying is that suddenly there is something which has led to this cut. Now, my bold sense is that management being conservative, they are building in some kind of client loss or deal loss, which may happen as a combination of some impact of recession, but more of the 2-3 senior leaders who have left the company. So I would say that they are combining both of them, and they are reassessing their guidance, and based on that, they have come out with this number. I don't think the industry is in such pessimistic mood. We have seen all the numbers and all the comments which have come till now. Obviously, there is some softness even in PCS. There was some softness, but it doesn't warrant this kind of guidance cut at all. So I would say that it is more of a company-specific issue rather than a sector issue.
Okay, so then in a way, the market should look through this. Although most company results and outlooks, etc., from top-tier companies have been a little underwhelming, right, Sandeep?
Yes, they are little soft and underwhelming, but they are not, negative, or they are not there is no such great pessimism what we are seeing in the guidance which has been issued by Infosys. This looks like, some big event has happened, but I doubt that, this can be a sector problem.
Sanjeev, you want to comment on that? I mean, as an Infosys shareholder, what does one do? Because, the comeback has been pretty sharp in the last many months.
Correct. And we know from last quarter that there was a lot of expectation which got belied. But, Sonia, take it with a pinch of salt. If inflation is going to be 3% and bond yields headed lower, then the attitude is not the next quarter, but the next 6 months. There could be a change in US spending, and, all this talk of recession could take a backseat. So we will have to watch what their guidance is. Infosys has been one of the favorites of every institution, and I think that it will meet with a little tepid response given them, but they've always under-promised and over-delivered. So maybe a quarter or so of slight weakness, but if you took the rest of the case to an HCL or a TCS, they've all made very, very strong comebacks because the pessimism was far too ahead before the results.
All right, Sanjeev, since you're with us in the studio, you normally give us a couple of picks. The last time I recall Piramal Pharma and a couple of other names that did well. Mumbai visit, 2 or 3 picks.
Piramal Pharma, by the way, Prashant is up 55%. Huh? 72 is 105. 100. And 127, the Piramals have issued warrants. So why stop this stock at 150? So a little bit of, caution, but I want to be with blue chips, Titan. Okay. I think Titan is headed for 3,500. It's an expensive stock. But look at Diwali coming up, look at Rakhi coming up. These days, celebrations are across the board. Rakhi is as much as an emotional festival. And I think that their eye care business and all is doing extremely well. They're talking of 1,000 stores in FY24. So Titan has given you this correction. I would say please enter. The numbers on August 2nd, Prashant, will be better than the last 2 quarters. So I think Titan is an expensive stock, but it's my top pick. Secondly, I saw the numbers of ICICI Pru. Look, I am very bullish on the insurance space. What money you put into a fixed deposit, if you did an insurance SIP for the next 10 years, you will be triple the size. The size of the behemoths, the background or the power behind the promoters is huge, and insurance is untapped. On their APE business, they've seen a little cut, but the protection business has grown. So I think at 540, 545, if I could pick a superb stock to buy, it would be ICICI Pru. Third would be, again, my normal course of Piramals, and also I include HDFC Life. But look, the 3 stocks which are going to outperform maybe in the next 2 years are Zomato, Paytm and PB Fintech.
Okay.
But HDFC Life has not performed at all so many years.
That's agreeable, but it's the consolidation of the Exide takeover. Sonia, they've made inroads into the whole of India. Exide covers the whole of East regions with the small players, you know. Now you can imagine what the contours of size and the economies of scale will play out. A quarter or so has been there. But if you are owning insurance, it's like what HDFC was 30 years back.
Yeah.
You had to own the pedigree or the bank.
Sure.
And I think HDFC Life meets that.
Sanjeev, we were hoping that this would be a much longer chat, and it's great that you could come in. Thank you so much for joining in. We have the Infosys coverage also waiting, so appreciate it very much here.
Kudos to you, Prashant. The finest gentleman I know from 2009 is Prashant.
Wow.
The prettiest lady is Sonia, and the maverick, my favorite is Nigel. So I hope you three keep growing, and we see 21,000, and I'll be back in Bombay.
Thank you so much. Thank you.
Thanks so much. Thanks a lot for joining in.
All right, Sandeep is with us as well. Sandeep, thanks for waiting by. So in terms of specific stocks, what is the? What would you do, Sandeep? Infosys. I reckon that. First of all, your call on the Infosys stock and other stocks.
So I would say, that, as Mr. Bhasin rightly mentioned, that, 3-4 months down the line, we don't know what will be the inflation and what will be the recession scenario. But these companies, you have to remember that they are a cash-throwing companies. They generate very good cash flows, and they have gone through this 1 or 2 quarter blips many times in the past. And those are always the opportunities from where you make money. I will give you one simple, parameter which I have been tracking for last 15-20 years, that whenever these companies, cut guidance or postpone wage hikes, postpone bonus, postpone variable pays, those are the times when stocks make bottom in terms of price. From there, 1 or 2 quarters, maybe, numbers may be little muted, but the stock bottom mostly happens around these events. So I would be very optimistic, and given the large caps are now at undemanding valuation, I would say that for a patient investor, this is the best time to enter the stocks. Also, please keep a watch on leadership changes, because this is a B2B business industry. So wherever leadership changes, huge money is made. There 8 out of 10 stocks in last 3 years have made tremendous amount of money where there has been leadership change, because being a B2B business, if you are able to get 4 or 5 new clients also, it changes completely the revenue trajectory, and obviously the operating leverage helps margin to come up much above what people are expecting. So leadership changes and large cap undemanding valuation, both are great combination to buy with a 4-5% downside risk, but in 6 to 12 months you will make good money.
Okay, Sandeep, appreciate your thoughts, and thanks for staying with us on CNBC TV18. So that's the word coming in. Infosys, the guidance cut would have been perhaps a company-specific problem. We'll know more in a bit. For now, let's take a quick break. On the other side, Anuj will be joining in to give us a quick trade setup. After that, Pralay Mondal, the Managing Director and Chief Executive Officer at CSB Bank, will be with us to discuss the Q1 earnings. Stay tuned.
Okay, welcome back. I think, 9 minutes to go for the pre-open session. Let's get Anuj, who's here with how he's looking at things. Anuj, good morning.
Morning, Prashant. Well, it looks like that date for 20,000 perhaps would be next week now. It's okay. Perhaps that will give the market the exact timeline of 21 days. But you know what? My belief is from here on, Bank Nifty is going to be the one which will really take the market higher. And market will get into the comfort of Bank Nifty because IT is struggling a bit, especially after Infosys. And the Bank Nifty after last 2 or 3 days has opened the door towards maybe even 48,000, which is at 46,000 right now. And that's because ICICI Bank and SBI, the two stocks which actually led this market, both have shown signs of taking back the leadership. And I think that's very important. The ICICI Bank numbers on Saturday, of course, stocks extremely strong. If SBI delivers on its numbers, especially on net interest margin, that is the one to track. It can maybe even move to 700. It's that kind of a stock. IT from here could be a bit of an underperformer. Though within IT, you will see some individual stocks which could eke out some outperformance. I'm getting a bit nervous about the small cap space because the rally has been too fast and too soon. So perhaps slightly cautious on the small cap space. As far as today's trade is concerned on the Nifty, the levels I'm watching out for first is 19,758, which is yesterday's low. I think the most important support for the market now is the 10-day exponential moving average, which is 19,612. In fact, a correction towards that would be quite healthy perhaps for the market. On the Bank Nifty, where I'm slightly more positive, I think it's one shade stronger than the Nifty now. And ICICI Bank and SBI both looking very strong. Just need HDFC Bank to join the party. That's been sort of consolidating a bit. If that happens, then of course this move on Bank Nifty perhaps could be unstoppable.
All right, Anuj, thanks a lot for that. Well, today perhaps this party could be spoiled by Infosys and HUL. Let's take it from there. But first up, we have CSB Bank. That's the corporate on our radar today. Their net interest margins improved while the gold business performance was also strong. Slippages have declined, which is very positive, and loan growth is also robust. Pralay Mondal, the Managing Director and Chief Executive Officer at CSB Bank, joins us now to talk about that. Mr. Mondal, thanks a lot for joining in. The loan growth was very strong this time around. Can you tell us what would the overall loan growth look like by the end of the year in FY24, both on the gold loan side and ex of gold loans?
Good morning, Sonia, and good to be back on your show. Yes, we had a growth around 29-30% this quarter, and that has been a strong growth. We had predicted we will grow faster than the system by 50%. We have done slightly better than that. The way the next few quarters are playing out, I think we'll sustain the level of outperformance on the loan growth. And obviously, if you have to do a good loan growth, we have to have a growth on the deposit franchise as well. So I think we're all set for a good year.
What could you quantify? What could a good year be, sir? Both on the loan growth, I think mid-20s is what we were talking about earlier in terms of a loan growth. So do you maintain that? And also on the corporate book, there's been a bit of a degrowth on a sequential basis. So how do you see that move up as well as your core? The big focus has been on gold. What kind of a growth are you looking at there?
Good morning, Nigel. Yes, I think we had given an indication around mid-20s. I think we'll hold to that, and if you're lucky, we can do better than that as well. On the composition, I think wholesale, what happens is one deal here, one runoff here, etc., can make a little difference, and that can change quarter to quarter. But overall, I think the mix broadly remains the same, and gold loan will continue to do well for us. As I said, that till FY25, the gold loan will continue to be our mainstay. Having said that, 25 onwards, I think the mix will start shifting more towards retail and SME. And by FY 2030, as per our SBS 2030 vision, we'll have retail somewhere around 20% and SME somewhere around 30%. So that's a long-term trajectory, but immediately, you're right, we'll be on track on what we are progressing on.
And maybe a little better, Pralay, right? As you said.
Hope so. I mean, with your good wishes, we should be able to do better.
All right, got that. And deposits were down on a quarter-on-quarter basis. Could you talk to us about that? Are you shying away from taking on bulk deposits?
Yes, Prashant, good morning. What you said is absolutely right, that in the Q3 and Q4, we picked up a few larger deposits, and rates were at a peak. So we are letting them go because we strategically took those deposits for the short term. And that is where you'd see that LCR is getting impacted a little bit this quarter because those deposits are going out, and we are letting them go out because we are not renewing them at those rates, because we want to have a more stable cost of funds and cost of deposits. So from that perspective, it is a tactical play, and that has played out well for us. And right now, granular deposits are coming in at reasonable rates, so we should be able to hold on to it.
Okay. On the asset quality side, I think what the street definitely likes is the fact that slippages have fallen. They're down almost 6% compared to last quarter, and overall gross NPAs have also improved. Is this a trend that is sustainable over the next couple of quarters?
I think at least for this year, I don't see any reason why we should have any major surprises there. 1.27% and 0.32 on the gross and net NPA side, which has gone below where it was last year, same quarter. I think we'll be able to sustain that, and credit cost will be somewhere around neutral to negative to positive zone. So it would not be material that much. So I don't see any reason why we will have any challenge on our GNP and NPA or credit cost.
Okay, all right. Final question then. It's a two-part question, Mr. Mondal, before we let you go. Good to see your NIMs above that 5% that you have been maintaining, close to around 5.4%. What's the trajectory from here on the NIMs? And your cost-to-income ratio, that shot up. I recall you telling us, that it's likely to come back towards that 50% odd. By when?
Good morning, Nigel. Yes, I have told it before. Again, I'm telling that cost-to-income in the short run till FY25 will be elevated. And then it will start coming down, because in our cost to income in the denominator, there is cost plus investments. Those investments will start playing out FY25 onwards. And then it will move down to around 45% by FY2030 as per our SBS 2030 vision. So that's on that part. On the NIM side, yes, we had around 5.4, which was even quarter to quarter, it was reasonably okay. And year on year, it is better. But we may have, because some of those larger deposits will play out this quarter, so we may have some kind of a depression on the NIM for this quarter. But coming Q3 onwards, I think we'll sustain the NIM and will remain well above 5%. Our guidance was 5%, and we'll be able to hold on to that.
Okay, all the best, Mr. Mondal. Always great speaking with you. Have a good weekend, and thanks for joining us on CNBC TV18.
Thank you so much. Thank you.
That's CSB Bank. Very confident there. Let's take a quick break on that note. The market doesn't look confident today. The Gift Nifty is indicating a weak start. Mitesh Thakkar and Shrikant Chauhan will join in for some technical trades in a bit. Stay tuned.
Welcome back. Hope you're having a good morning. Well, let's get in our technical experts. We have Mitesh Thakkar as well as Shrikant Chauhan who join us. Good morning, gentlemen. Well, Mitesh, how do you approach trade today? We're likely to see a 90 to 100 point downtick.
Morning, Nigel. We've maintained that buying at these levels will not be a good idea, purely because of the fact that we've had a run, we were slightly outbought, and we were trading the stop loss. I think 19,700 still remains the decisive factor. We might open gap down by about 80-90 points is what the SGX or the Gift Nifty rather is indicating. And I think, if we get more declines, if we get closer to 9,700 or 720, 730 levels, that is where, we'll look if there's some kind of sense in buying into the index. Otherwise, we'll just wait and watch. So it's been a market which has had a good run. So if you have not participated, now is not the time to jump in, and take a position immediately. But yeah, trading will be more on stock specific side.
Okay, got that. Shrikant, what about you? What's the index trade?
Yeah, good morning, Prashant. I think, except for Infosys and I think other stocks and sectors are supporting to the market rotationally. We are of the view that in case if there is any correction, then close to 19,800, 850, we should look for adding some long positions with a stop loss at 19,700. We are of the view that the way FIs are infusing funds into the Indian equities, every minor dip will be an opportunity to create some long positions. I think markets are very close to cross or to hit the levels of 20,000. So today's correction will be an opportunity for short-term traders to enter into some long positions. Also for the Bank Nifty, there also 46,000 and 45,900 is going to act as support. And yesterday we saw good amount of buying attraction in all the, private as well as PSU banks. So I think both these banks are going to support to the market if there is any correction in the market.
Okay, all right, Shrikant, noted that. Buy the dip is the call. What about individual stocks?
These banks are really doing well, and most of them are crossing their swing highs in a very short span of time. So based on that, we are of the view that the FIs are consistently infusing funds, and based on the overall performance of the sectors and stocks, State Bank looks good at current levels, which is currently around 610, 612. From here, the stock can easily surpass its previous high of 630 and all-time high of 630. So at current levels, State Bank is a buy with a stop loss close to 600. The other stock which we like is Grasim, and after a very long time, the breakout is quite encouraging. So from here, the stock can go to the levels of again 1900 or 1930. So at current levels, it's a buy. And finally, the stock which we like is Lupin Laboratories, and all the pharma stocks are really doing well. In that, Lupin should do well, and the stock can surpass the levels of 1000. So Lupin is also a buy at current levels with a stop loss close to 920.
Okay. By the way, the pre-opening rates have settled lower, much lower. So the Nifty is down about 1.5%, and a lot of stocks, Infosys, HUL, Reliance, all under pressure. So heavyweights are exerting their force on the market on the downside. But Mitesh, what would your stock ideas be for the day, considering it's going to be a weak opening?
I have a mix of buy and sell calls. On the buying side is Grasim if it starts to get past yesterday's high of 1823.24. So I've kept a trigger at 1825. Buy above that with a stop at 1800 for a target of 1880. And on declines, I would want to look to buy into National Aluminum around these levels of 91, give and take 25 paisa, and keep a stop below 88.75, and a target of 96.5 can be looked at. On the selling side would be ABB. Sorry.
Go on, sorry, Nitesh. Go on.
On the selling side is ABB with a stop at 42.35 for targets of 4100, and Shree Cement is a sell with a stop at 23.600 for targets of 22.750.
Got it. Thank you very much, gentlemen, for those calls, for that view, Mitesh and Shrikant. Just a quick word on the pre-open. Let's just have the Nifty up quickly. And then just a bunch of names, right, which are reacting to results. Nifty is on your screen. It's down 200 points, but still trading another 2-3 minutes. Let's look at United Spirits. I think numbers were good. Stock is up about 2.5%. By the way, Nigel is dancing. You can't see him, but
what is the contribution bid of Nigel?
Anyway, let's look at
it's only Friday morning.
That's United Spirits 2.5 higher. There's what else? CoForge. Let's have that one up. Let's look at Mphasis and Persistent. Those are the other names, and of course, Infi. CoForge is flattish. Mphasis maybe a little bit more, 5%, perhaps the weakest in the mid-cap IT space in terms of earnings, and Persistent is down about 3.5% as well. Infi is down 9.5%. Last quarter was a shocker, and this quarter is a shocker as well. 13.12 on Infosys.
You know, I was just thinking maybe the street needs more of United Spirits after looking at such weak numbers from Infosys and HUL and perhaps Reliance as well. So no surprises that the volume growth has come in double digits.
Yeah, thanks to both of you, it's done well. Anyways, let's move on. Well, it was a bit of a soft quarter coming in for Nelco, but the revenues declining both on a year-on-year as well as on a sequential basis. Mr. Nath, the Managing Director and Chief Executive Officer of the company, joins us on the show. Hi, Mr. Nath. Good morning. Well, we're not used to this, right? A bit of a degrowth on the revenues. What went on in the past quarter? And also, in the past, you've mentioned that the growth in FY24 will be similar to FY23. Last year, you grew by 20%. Is that still on?
Yeah. Good morning. Thanks for getting me in. Let me just give a perspective of the revenue comparison with respect to last quarter, that is March 23, as well as June 22. First, let me cover June 22. If I were to look at the June 22 quarter versus this June 23 quarter, there's a major difference in terms of our revenue mix. We had a fairly large amount of project revenue in June quarter of 22, but against that, during this June 23 quarter, our satellite communication services revenue, which is a VSAT services revenue, has grown significantly. In fact, it has grown by 33% over the same quarter last year. So therefore, you'll see the profits are significantly better than what was there the same quarter last year, right? So I think so that's the thing. And our main focus is to grow our satellite communication services business, and that has grown very, very well. It's grown by more than 33% year on year. So that's the first part. But when you look at the top line, it doesn't show because there was a large project revenue, which is lumpy in nature. It doesn't come every quarter. That's as compared to the same quarter last year. As compared to the previous quarter, I think in the earlier shows, I have also mentioned that there is some amount of seasonality, variability in our business in some of the sectors. Our revenues typically starts going a bit soft in Q1, first quarter, second quarter, then keeps on picking up in quarter 3.
Right. Mr. Nath, sorry to come in, but some of this is, what you've made in the past. I just want to ask you, what's the trajectory from here on in terms of revenue growth for the year? Will it be 20% like how you did in the past year? We get that, a bit of lumpy business in the first quarter of this year. That's why it's not looking so good. But for the year, 20% is on?
Yeah, I think so. I've said earlier that we don't give guidance, but I've said that our performance is on track. We are doing well. We see a lot of opportunities coming in the market, and therefore we expect a similar growth for the year as a whole. But if you also look at it from a profit perspective, we are better than last quarter as well as same quarter last year. So I think there's the other part that's to look at.
Sure. Mr. Nath, due to paucity of time, just wanted to ask you particularly for the aerospace and maritime communication segment. Earlier, you had told us that about 25-27% of your business comes from those verticals. What kind of growth rate are you seeing there, and what is the potential over the next 1 to 2 years?
So we are seeing a similar kind of growth that we see as an overall business. The maritime is a business which has some amount of seasonality because during the monsoon, the traffic comes down and therefore your revenues tend to come down. Aircraft business is fairly stable. But in aero business, the big jump will be happening when the domestic airlines start using Wi-Fi on the aircraft, which is about a year from now. And so we'll see a fairly large jump in the aero services revenue at that time. But overall, we are bullish on that. And we see a similar growth that we have been seeing so far in the aero and maritime business as well for the current year.
Okay, just one final question. When do you think the company can become debt-free? Because the debt has been moving down slowly and steadily.
Yeah. I would not like to give a specific date to see the track record that our debts have consistently come down quarter on quarter. Even this quarter is lower than last quarter. So therefore, I would not like to give any specific date for being debt-free. We are also making a lot of investments for expanding the business. We are making investments in creating infrastructure. So there's a mixed bag in terms of while the revenue is growing, the profits are growing, but also a lot of investments are getting made for creating the infrastructure and our strength to go forward in the future. So it's a mixed bag. So therefore, it is difficult to, at the moment, comment as to when will we become debt-free.
Mr. Nath, it's a pleasure, sir. When you said you're waiting for that big opportunity, internet and domestic flights, right? We're waiting for that as well. I guess all people who fly, they're waiting for it. Don't let it depend on the in-flight entertainment system. So it's going to be a big one. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC-TV18. That's Nelco for you. Well, let's turn back to our technical experts. 9-10 calls with Mitesh and Sudarshan. Mitesh, what do you have?
I would want to see if Grafton starts getting past yesterday's high, then buy into it with a stop at 1800 for targets of 1880.
Okay. By the way, many stocks in focus, right, this morning. So let's keep an eye out on them. Of course, Infosys under pressure. Persistent Systems, Mphasis, earnings were very weak. So that stock as well under pressure. On the upside, you have United Spirits with a volume growth of 10%. That's batting for the bulls this morning. But Infosys actually dragged the entire sector down with it. So keep an eye out on that. Mangalam is here to tell us more about HUL and some comparisons with GCPL as well. Mangalam, over to you.
Well, from the reported numbers from Hindustan Unilever and the management commentary versus the first quarter update that we've got from Godrej Consumer tells you that maybe Godrej Consumer would be on a better footing than Hindustan Unilever. I mean, for Hindustan Unilever, the home and beauty care business saw volume growth of anywhere between 5 to 6% It was dragged lower by the food and refreshment business. The beauty and personal care business in particular saw mid-single-digit volume growth, and then they also alluded to increased competitive intensity in mass categories. That's about the industry leader. Now, what did GCPL do? Well, their India business has delivered a double-digit volume growth. At the same time, their gross margins have increased by about 800 to 1,000 basis points, as against Hindustan Unilever of 260 basis points. And they said they've gained market share in key categories. So is it that they are providing a tough challenge to Hindustan Unilever in the mass category and the soaps category or not, is something that we'll have to watch out for. And for GCPL, there is that additional key trigger of scaling up of Park Avenue's businesses as well. In terms of valuations, both of them are similar. GCPL is at a tad bit of a discount. So let's see whether GCPL stands to benefit from HUL's market share loss.
Okay, thanks a lot for that, Mangalam. Well, in the final minutes of trade yesterday, we got CoForge's numbers. Rima joins us to give us a quick revision of those numbers. Rima?
Thanks so much for that. I think what the street likes is that the company is holding on to its full year guidance. The company maintains the 13 to 16% top line growth that they had earlier guided for, especially in light of Infosys slashing their top line growth. The miss for CoForge was on the margin. So their EBIT margins declined much more than what the street was anticipating, down 400 basis points. But the company said, like every year, we will recoup the margins from Q2 to Q4. And therefore, our gross margin guidance of 50 basis points expansion stays intact. And even the adjusted EBITDA margin guidance of flat margins for the year remains intact. The positive in the numbers is the big jump in the order inflows at the highest ever levels, 76% increase quarter on quarter, 70% on a year-on-year basis. Nomura says CoForge is their top mid-cap pick. Their target price is 5,300. But Motilal believes the valuations are expensive. All the good news, the robust earnings are priced in, which is why they don't see too much upside. Back to you.
All right. Thanks a lot for that. We're just getting ready for the market opening now. The Nifty is... the indications are that there'll be a steep cut this morning. Of course, we all know that Infosys announced a sharp cut to their FY24 guidance. So that is something that's going to, play havoc on the market this morning. A lot of downgrades coming in on Infosys as well. The company is speaking about softening of discretionary spends and deal start dates getting delayed. So that is something that will be top of mind for the market. Apart from that, HUL's disappointment in earnings will also be top of mind. And then you have Reliance and ICICI Bank coming in today and tomorrow. So lots on the market's mind. But looks like the first tick on the index is going to be negative. And there you have it, 170 points down, 185 points now, inching towards almost a 200-point cut. The sensex is down 700 points. Forget about 20,000. It's now inching closer to that 19,700 mark on the Nifty. Straight off the back, Infosys is down about 9%. But what's more interesting is that it's taken the entire IT pack down with it. So it may not just be an Infosys-specific issue. The fact that Infy is saying that discretionary spends are under pressure may be indicative of the entire sector issue. So HCL Tech Mahindra, Wipro, LTI, Mindtree, TCS all down about 1 to 5%. HUL is the other one that's dragging down about 2%, so keep an eye out on that. And other losers include some of the winners of the last fortnight or so. So auto stocks, Eicher Motors, Maruti Suzuki, Bajaj, Hero are all under pressure. Reliance is going in soft into its earnings. It's expected to be a muted quarter this time because of weakness in the refining segment. The refining cracks have been under a lot of pressure, so that is reflecting on Reliance stock. On the upside, L&T batting for the Bulls up about 2.5%. Titan, that was one of Sanjeev Bhasin's picks as well, up 0.2%. Britannia, FMCG is not doing too badly actually. And some banks are holding up. Kotak Mahindra Bank, IndusInd Bank, Axis Bank, M&M, not too bad. So for the market, yes, we started with a steep cut. Now we're trying to claw back a little bit. In fact, the Bank Nifty is actually in the green, which may be a sight for sore eyes, for the bulls at least. It'll be a good thing, but the opening tick is not bad.
Well, that's right, Sonia. Since IT is dragging, the Nifty Bank will have to play out of its skin today, to hold the Nifty up. The low of the day is 19,776. So if you want a reference point, the 19,750, 19,776, that's the crucial support for the day. In terms of stocks that are pulling back, well, from the broader market, you have Mphasis that's down. Oberoi Realty as well is down close to 3.5%. Mphasis and Persistent, actually, both of them are down in reaction to its numbers. And KPIT Technologies as well has corrected more than 10% from the recent peak. After a big run, Polycab is finally pulling back a little bit. That's down close to around 2.5%. And Havells, the numbers actually were a little bit more disappointing than what was anticipated. So that's pulled back another 2%. Remember, yesterday it came off the high point of the day. On the flip side, IndiaMart reacting to positive results. You also have a buyback that's been announced. Union Bank is up close to around 3.5%, so both of them doing quite well. And a couple of other notable movers with high volumes is Suzlon. Who would have thought it's on its way to become a 20 rupee stock? It's up 5% as we see. Prashant.
Well, there is, 180-point cut on the index, but there is so much going on just below the surface. Polycab is coming up as the number 2 volume traded stock in the market. It's down 3%. So 20% gain on Polycab after results in the last 3 days. Yesterday, it was limit up at 10%. So that is seeing a little bit of pullback, just a little bit. TCS and HCL Tech, and, I was saying this in the morning, whether Infi will finally sort of, force, or rather force markets to rethink their let's look through this quarter of pain kind of stance, because markets so far had looked through all the poor numbers. TCS is down, HCL Tech is down, Tech Mahindra is down. So it's large cap, mind you. And of course, mid caps where there are individual disappointments like Persistent and Mphasis, which are selling off 3% each. So it's a tech day, complete tech day. And we've seen this so many times in the past as well. The entire space goes for a bit of a spin. Havells is down 1.5%, 1328 on Havells. It's kind of reacting to the numbers which came out. And what else? Lever, I think we mentioned. KPIT is down about 3 3/4. More tech there for you. South Indian Bank was down 10% yesterday. It's down another 5% this morning. And actually, there is more tech. I could go on LTTS and a few other things. And by the way, right out of the gates, volumes are pretty large. So it's now no dearth of volumes, but it's largely news related. So there is an impulse. Heavily traded, a lot of these tech names. On the upside, Mazgaon Docks, like clockwork, is up another 5%. I think at least the last 2 days, every day 5%, another 5 this morning. L&T we mentioned. RVNL was a big mover yesterday. By the way, RVNL is a top volume traded gainer. It's up 4%, 134 on that stock. IndiaMart is up 3%. The management will be with us. Shriram Finance, it's coming up this morning with volumes, 3% on Shriram Finance, 1830. We've got the dairy companies, right? Dodla, you had Hudson Agro, you had Parag Milk, all which went up 8-9%. I can spot Dodla, which is up 4% this morning. And there is APL, Apollo, and a few others which are coming up with strong gains as well. So, there is no dearth of activity. Market breadth is a little negative. We've got about 1,000 stocks lower as compared to about 780 stocks, which are higher at this point in time. Ajay Srivastava is with us, CEO of Dimensions Corporate Finance Services. Not a man to mince words, and I hope you don't, Ajay. Good morning. Great to have you with us here. How are things looking, Ajay? Almost at 20,000 and then, boom, Infi. So a bit of a setback this morning. But near to medium term, what's your stance?
Well, the stance is very simple. We don't buy at this point of time. Certainly not buying anything in the majorly in the large caps in the market at this point. There are selective stories which are coming around, which are newer themes in the market, which possibly are decent buys. Some good results are coming out. 1 or 2 good results came out yesterday, which could become a potential. But by and large, it's like you watch your portfolio is doing well, your shares are doing well. You don't want to commit capital at these rates. I think I am still on the side of the FDI, the PE funds, which in cash at the highs, and they are encashing from the Indian market, then on the side of the FIs who want to buy at this rate. So I'm sorry, party spooker saying better to sell, book your profit, than to buy and worry about how to make a return on stock prices like this. It's just incredible disconnect with the reality. And therefore, one has to be very careful what is doing with the capital. Incredible, absolutely. I think it's, one would say that cannabis is legal in this country, I think.
Oh dear.
It's okay, Ajay. You don't have to be sorry for your view. There are all kinds of views in the market, right? That's what eventually makes the market, I guess. But there's no stopping this rally. At least that's the sense that you're getting. 15% in 3 months? It's been ferocious, right? What do you do at a time like this when earnings are not that supportive? So if you are, say, invested in names like Infosys, HCL Tech, TCS, and you see such subpar earnings, what do you do? Do you churn out or do you just book your losses?
See, I think, it's important to focus on the one which are more transient in nature, where you have booked a decent profit. I think these are bellwether stocks. They will see their ups, they will see their downs. And if it's part of your core portfolio, just leave them alone. They will have the bad days and the good days. The problem is that you have to start looking at encashing the weaker parts of your system. I think that's where the portfolio focus is. So one is keep churning out the weaker parts of the portfolio, which don't have a good story. Number two is churn into newer stories. As we have seen, this country has done an amazing thing, newer stories. You have an airport lounge company going on to railways and roadways doing phenomenally well. You got your own fintech companies online, which are doing extremely well. So, we get stories of defense coming out. You saw what happened to the drone story coming out in 2 or 3 companies. So I think the focus of investors should be on capturing the newer stories, then to look at the older stories, because the return on capital employed, that's the key question. You get 9 to 12% today yield in the debt market. Now, how do you beat 12% yield of the debt market instrument by equity? And with a margin of risk, that means you're talking about 18 to 19% threshold rate of return on equity. So you got to be very stock focused and says which of the stocks is going to give you the return of 18, 20%. Themes are not important at this stage. What is important is you are in a new age stock. Are you into new themes, or are you still batting with the old fuddy-duddies, autos, and so on and so forth? Because these are not going to give you 18, 20% returns. I think the mood is newer age, newer stocks, newer themes, and catch them young and early rather than buying at a bigger and higher level and the older stocks. They're not going anywhere. Indian consumer story is not going anywhere this year. So people who think that the great story of retail is about to unfold should be very badly shaken when the results start to come out.
Okay, all right. Ajay, just hold on to that thought. As we speak, the Nifty, that buy on dip has worked yet again. We are 100 points off the low point of the day. The Nifty Bank, as we pointed out earlier today, that has to play a stellar innings. And at least for starters, it's got its eye in. It's seeing the ball big and it's smashing it for the time being. It's up close to around 125 points approximately. And though Infosys is down, that's why the Nifty IT index is down. But you pull up some other stocks. Mphasis has almost moved into the green. It was down close to 4% a short while back. LTI, Mindtree as well has moved up. LTTS as well. So these stocks have recovered at least 2 to 3% from the day's low. Even CoForge now is up close to around 1.5%. Well, Ajay, you were talking about getting into some themes early and identifying them as well. Help us out with some of them. I mean, our viewers would love to know.
No, I just told you, like some of them are very discovered themes. It's nothing new. They look at this airline launch company which is an unknown theme in India, and look at where it has gone. You will see in the defense company, the smaller company, the drone company, look at where they're gone. For a change, the aviation stock has gone into a different orbit altogether. The competitive scenarios change. So you are in a safe zone. There's no competition. So the key is look at the sectors which have no competition. If you look at this online fintech space, there are only 2 or 3 companies there. Banks may try to come into the space, very difficult at this point of time. So you got fintech, you got lounge, you got airlines, you got limited amount of hotels. I think they are running out of space at this point of time because homestays will challenge them in the next 3 years. I think hotels have largely done their bit, to my mind. They may not give you that much return. And then, of course, you just mentioned your defense companies, which continue to be a scarcity element in the country at this point of time. So, so put together this basket, pretty decent basket, which comes around to you. And then you have the regular stocks that you, of course, always have in a portfolio, whether it's some metal stocks, whether you got some commodity stocks, which give you very hefty dividend returns. So built up the portfolio looks good. And as you said, market is in an extremely bullish mode. As I said, when you are in the party mood, you really want to keep having one more. The question is, next morning when you wake up, did you really want to have that one more?
Cheers to that.
Well, okay, that's well put. Ajay, ITC, I think we've talked about this in the past, and I know it's been the longest-standing buzz, the demerger of the hotels business, but it's there and it's getting louder once again. Just wanted to ask you, at where it is now trading at ITC, if an announcement of this nature was to come in, is it in the price, or you think it could spur another move higher?
See, okay, for disclosure, we have a holding. So to that extent, we are biased on this one. I think it will spur higher. And I think the reason it will spur higher because it is the start of a process of a thinking. And I think it started with a new CEO 2 years back who started focusing on return on capital employed. So if they split it out, I think what will do, two things will do. One, allow the investor to own the hotel separately and decide to get out of hotel should it want to at some point of time. And number 2 is focus more on the cash generation businesses, like FMCG has become cash positive, the tobacco is positive, and therefore the dividend returns would become absolutely phenomenal of this stock. And you don't have an overhang that tomorrow will just spend 500 crore, new CEO comes on the hotel business. So I think it's more than just the demerger financials. It's a statement of intent that we're going to keep a cash flow engine of the FMCG company running without any serious capital commitment. That's a big significant shift. will see a major bump in the market if it happens. If they do a pure demerger, that's a wonderful thing for the market. You saw what happened in Reliance, an ordinary company which had no track record came out and the market had a blip. Now, whether the blip sustains, we don't think so. But whether it, for the time being, it did. I think ITC, on the other hand, is a much more powerful thing because you have a split of a good quality operating asset which can have a miles to go and miles to run in a it's like an aviation. It's a two-leg race in the market for hotels. Just two groups or maybe third lemon tree in the middle of it. But I think it's a two-string, like airline.
Sure.
Love these two duopolies who both want to make money. Unlike the telecom, where one guy decided he doesn't want to make money and the whole sector went for a toss.
Okay, by the way, don't lose sight of what's happening in the market. So the Nifty has recovered almost 100 points from the day's lows, and this is courtesy the banks. The banks are really batting for the bulls hard. So bank Nifty is up almost 130 odd points. So keep that on your radar. Definitely some buying coming back. But Ajay, another space I wanted to ask you about was this whole home improvement theme, right? Because not just Polycab, which was definitely the stock of the week, very good numbers there, but even others in that space, whether it's Havels, whether it's Finolex Industries, margin improvement has been steady, and so many more coming up now in the next couple of weeks. Do you think this is a space to latch on to despite the expensive valuations?
Sonia, just to come back to the market, I think if you look at what my desk is telling me is the story lies in the futures of Nifty. While the Nifty was down almost 0.9% or 1% in the morning, the futures were only down 0.3% at the worst part of the day. So I think the story is unfolding on the future side more even than the cash side as to where the buoyancy and the confidence is coming. And so I think the pointer, just for the investor's sake, should be just keep looking at the futures more than the cash, because that gives you the pointer where the mood of the market is at this point of time. Coming aside to the home improvement theme, I think the theme is doing well. The real estate boom has just started in the sense of the kind of construction and the projects launched. They will see a good trajectory. Having said that, I think someone like Polycab, they got a big benefit of exports. It was not really, if I'm not wrong, my research report says it's more export that gave them the benefit than domestic. But I think the story is steady, except the fact, and I think this is the important part, except the fact, I don't think these stocks will give you a healthy return. They've factored in a lot of growth in them, and a slight wobble on the real estate also side could take them apart. So I think they are overpriced, if you ask me. Whether any other stocks, certainly overpriced. To get a return on this means that they need to perform at 140, 150% of the projections. Market mood can do whatever it does, but for them to perform and give you a 20% return in the next 3 years, they need to do a really heavy lifting. I'm not sure. And real estate developers, mind you, Sonia, extract a very steep bargain when they buy from these companies, the product in bulk. And, and that is where the bulk of the market is going to come from, the real estate developers. So my guess is you will see, and you saw in these results, margins are still squeezed, even though volumes are up. So as a sector, would it outperform the market? Answer is no. Would I buy them? Answer is no. Will it seem too expensive? Absolutely too expensive for the growth that is going to come to them.
Okay, well, Ajay, we would have loved to continue this discussion, but we have many companies that are lined up and, some of them in the IT space, which is, of course, top of mind. So we're going to take your leave now. Thanks a lot for joining us and have a great weekend. Okay, that's Dimensions Corp. By the way, the stock on our radar right now is CoForge. And it's interesting because at a time when Infosys has actually cut their guidance, CoForge has maintained their FY24 revenue guidance of 13 to 16%. So at a time when all IT stocks are under pressure, CoForge is actually up almost 0.5%. But the margins contracted by almost 400 basis points sequentially, but a big jump was seen in order inflow, which is up 76% sequentially and 69% year on year. And as I said, the most important part is the company has maintained their guidance. Sudhir Singh, the CEO and Executive Director of CoForge, joins us now to talk about that. Mr. Singh, good morning and thanks for joining in. I wanted your view on what's happening in the industry after Infy's numbers. So Infy saying that, discretionary spends are lower, timelines are getting delayed for the start of deals. Is this an Infosys specific issue, or do you think that this is something that the entire industry is facing? And in that context, would it be tough, you think, for you to maintain your full year guidance?
Well, let me take the questions in reverse order. We feel absolutely confident, and I mean this emphatically, absolutely confident that the guidance that we've given is rock solid. We don't see it, and we've stress tested it multiple ways. We just don't see any scenario in which we're going to miss our guidance. 13 to 16% constant currency growth this year is something we will deliver come what may, and our confidence has only gone up after our performance in quarter one. 2.7% sequential growth in quarter one came on the back of 4.7% sequential growth in the previous quarter and 3.7% in the quarter before that. So given where we stand today, year on year, we're growing almost 18.5% in CC terms, quarter one over last year, quarter one. We feel rock solid about the guidance that we've given. That we will deliver on come what may. As far as the macros in the industry are concerned, I guess there's no denying the fact that the macros are uncertain. Demand is depressed. So that's the macro scenario. Specific to us, we think we've proven to ourselves, even in this quarter, even in a vertical like banking financial services that is significantly stressed, that not only can we grow, but we can sign large deals, and we have signed a $300 million TCV 5-year large deal in BFS itself. So that's how I would posit it. Macros continue to be uncertain, but do we feel confident that we will deliver the growth that we've talked about? The answer is an absolute, emphatic, clear yes.
You know, when we speak with investors on IT, I mean, the only thing they talk about is this large looming uncertainty on the macros. And we'll come back to numbers in just a bit. But just to press on that point a little longer, sir, you know, take Infosys' case, right? They met investors, I think, on the 29th of June, 28th of June, I think. And reported numbers on the 19th of July. You know, they were sounding absolutely confident back then. Nobody changed their numbers, estimates, etc. And then, of course, we saw what happened yesterday. Of course, it could be company specific. It could be a client, two clients. Is that a risk that you see? Something similar? You're sounding very confident that you will do what you promised. But just to take on that point.
Well, I mean, let me put it another way. We've delivered on everything that we promised over the last 6 years. The guidance that we've given every year is a guidance number that we met without fail. As we speak right now, the view that I have, the view that the firm has, is a grounds-up view. We're not just looking top-down from a macro perspective. We're not just looking at the fact that we are already 18.5% CCYOY higher than where we were at the same time last year. Looking at the orders that we've already signed up for the next 12 months, which is what we call an order executable, that's already at $897 million. That's 19.1% higher than the same metric order executable 12 months back. So our confidence doesn't come, and of course I can't comment on Infosys and the circumstances therein, but our confidence comes from a grounds up build, from conversations we've had with clients, from contracts that are signed up, and from the fact that every time there's been a consolidation opportunity within our client set, we won. So in our case, large deal velocity is unimpaired. Last quarter proves it. The previous quarter proves it. Quarter 3 last year, we actually had 5. So that large deal velocity is unimpaired. Large clients, top 10 clients, continue to drive growth. We continue to be on the right side, like clockwork, of any consolidation that's happened. Hence, the confidence comes from a grounds-up build. 13 to 16%, as I said, is something we feel absolutely confident about. And this isn't just us making an assertion. We have a 6-year record. If you look at the order executable number that we declare every quarter, and you tally that with the actual revenue that CoForge has realized in the subsequent 12 months, you will find a very strong correspondence. So this isn't just a forward-looking statement with no basis in history. 6 years, 24 quarters, our record bears the fact that we deliver on the estimates that we provide, and we feel extremely confident, and I guess I've said that a couple of times already on the call.
Well, you're saying it as it is, Sudhir, and I can feel that confidence in your tone as well. So let's talk about a couple of other aspects then. You're in that journey to move from $1 billion revenues to $2 billion odd. And, you know, there is some kind of expectation that there will be some M&A activity. Could you tell us when you're going to move on that front, point number one? And also currently the promoter entity is the PE, Bearings. And they have brought down stake from around 50% to around 26% odd. Now you're leading the firm. Have you heard anything from them?
Let me just address the first question, which is the M&A activity. I want you to know that we are very keen, incredibly keen to make sure that we do acquire in areas of interest that we publicly called out. So anything around data, anything around cloud, anything around low code, no code, or a new sector like healthcare would be of great interest to us, is of great interest to us, and we have active conversations going on. Nothing that I suspect is going to close very, very soon, but we are clearly extremely interested in using acquisitions as a strong prong for getting from $1 billion to $2 billion with great speed. That's the broad intent. Really no comments on the promoter stakes. BPA has been, they've been fantastic supporters, fantastic advisors over the last 4 to 5 years. The management team continues to focus on performance. We've created our next 5-year roadmap, and we feel very, very strongly that the next 5 years will continue to be very strong growth years.
So, I want to ask you about what's happening in the BFSI space, because earlier you had mentioned that there is some caution over there. 30% of your business comes from BFSI, and your larger peers like Infosys have also talked about how there is a slowdown there. What kind of growth rate are you seeing in the BFSI space for your own business, and will it be slower than what we've seen in the preceding years?
It's likely to be slower than the kind of growth that CoForge has charted out, but the growth that we've charted out, if you look at us, has been, I would call it abnormal compared to industry growth rates. Last year, our BFSI business grew 45% over the previous year. There's been a 7-quarter stretch where the CoForge BFS business has grown double digits sequentially for 7 straight quarters. From that growth rate, we expect it to moderate. This year, we called it out earlier, we would expect our BFS business to moderate and get back to the company growth rate of about 13 to 16% in the current year. This quarter, BFS grew 3.3%. The previous quarter, it grew 5+%. For the year, we expect the BFS business to be somewhere around the 13 to 16% CC YOY growth, FY24 over 23.
So this 13 to 16% compares to what on an average in the preceding years? I didn't get that.
Last year, BFS grew 45% for us, and it was the clear outlier. This year, the travel vertical has picked up significantly. Insurance has picked up significantly. BFS has moderated. Overall, the firm, therefore, as a consequence, will deliver the 13 to 16% that we talked about.
Okay. All right. We'll leave it at that. Thanks a lot for joining us and speaking about the business and, more importantly, the industry and what's going on there. Let's slip into a quick break. On the other side, another big mover this morning is IndiaMart. Dinesh Agarwal of the company will be joining in to talk about their Q1 earnings. We will also have the management of Mphasis for their Q1 results coming up in just a bit. Stay tuned.
Welcome back. Well, just a few stocks that are doing well this morning because the Nifty actually was giving signs it's going to recover back towards that 19,900 odd mark, but that got sold into. So the intraday chart should come up for you. We're back down towards that 19,800 mark. Well, let's focus on a couple of good numbers, as I said. IndiaMart, well, they reported a good set of earnings in the first quarter. Their margins expanded by around 280 basis points, while the revenue as well jumped by close to around 25%. Although the company did witness a dip in the paying subscriber additions. Mr. Dinesh Agarwal, the founder and CEO of the company, joins us on the show. Hi, Mr. Agarwal. Good to have you on the show. And, you're an outlier today because the markets are in the red and the stock, in fact, is trading well in the green. So clearly the street likes what you've announced in terms of your numbers. Give us some outlook from here on. Your margins have improved. By when do you get back to around that 30% odd in terms of margins by the end of this year? And also your subscriber addition, that's come in a little bit lower. I was going through your website and actually you've increased the pricing. Has that hurt this addition? Is that one of the reasons?
Thank you, Nigel. I think in terms of the margin question, I have been answering this, that we will try to see how from here on we can reach back to around 30%, maybe by the end of this year or so. And this quarter-on-quarter fluctuation is because of our business nature of business accounting, because the collections come in upfront, the revenues flows from back, while the cost also gets upfront. So in every Q4 there is a higher cost, and that is why you see this margin fluctuation. But on an overall level, if you see year on year, I think we are better off than pre-COVID levels, and I think we will slowly try to improve from here. On the customers front, yes, we have taken a price increase. We were, before COVID, we were at 3,000 rupees a month. And during the COVID, we gave this support to 2,500 rupees a month. And we have again gone back to 3,000 rupees a month. And that has hurt the paying subscriber addition by about 2,000 for sure. We also had Q1 is generally slightly weaker. We also feel that there is some amount of churn which has increased, probably due to Q1 or probably due to base effect, because last year we have added a very good number of customers. So I think that is also picking up.
Okay, all right. So Mr. Agarwal, you're saying that this price increase that you have taken, that will hold out. But do you expect then the addition to go back towards that 6,000 to 8,000 that you have been doing?
Yeah, I think maybe just 1 quarter or so. I think we should look at 6,000, and then we will again try to go back to 7,000 to 8,000.
Okay, so you'll go back to 7,000 to 8,000. So 1 quarter of pain, and then perhaps 7,000 to 8,000 on an average is what you'll see in terms of paying subscribers, right?
Yes.
Okay. Let's talk a little bit about what the average revenue per user was. In this quarter, what did you see as the ARPUs? And also, I think on an annual basis, you were looking at an increase of around 5 to 6% in your average revenue per user. Are you on track to do that, or do you think that could be a struggle?
Yeah, we are on track to do that. In fact, we are doing better. If you see, annualized ARPU in the last 2 quarters have grown by 7% and 8% Y on Y. Even sequentially, they have grown by 2%. So I think we are on track to do that 5 to 6% ARPU gain. Okay, so 5 to 6% you're on track to do that. The collections have gone down on a quarter-on-quarter basis if you look at it in Q1. I think it's a 23% dip that you're seeing quarter-on-quarter. Can you explain the reason for that, and what would the collections look like on an average in the quarters to come? No, so Q4, as I said, is seasonally very high quarter. Okay. If you see year on year, the collections have grown by 25% or so. And so Q4 cannot be compared with Q1. Q1 is seasonally low and Q4 is seasonally very, very high.
All right, Mr. Agarwal, good to see, we have been chatting for the last many quarters, and I keep probing you what you're going to do with your cash. Now, you announced that buyback. It's a small one. But if you want to send out a better signal, maybe the promoter entity should not have participated. I think you're participating, right, in it?
Yes, it is a tender offer and everybody is participating.
But it would have been, from the investor community, it would be more heartening to see maybe the promoter entity not participate, but we take it that you're going to be participating in it. Any more M&A activity that we're looking at, since still you'll be sitting on a good amount of cash?
Yeah, so I think, three different possible uses of cash. One, obviously, for internal accrual purposes, internal safety purposes. Second is we continue to look for M&A opportunities. And if we find anything useful, we will definitely look at that. And third is returning cash to the shareholders, which we are trying to balance every year.
So M&A, you haven't identified anything for this calendar year yet?
Not yet. We have been trying to find something, but we haven't found anything.
Okay, got that. Would you like to end by telling us what you can guide for in FY24? Because in FY23, your performance was very good, a 30% growth on the top line. Is this something that you can replicate in FY24?
FY23 had a base effect of FY22 also, because the Q1 of FY22 was a little washout to second wave of the COVID. So I don't think we would see the 30% growth, but I think we will try it and maintain the growth that we have been able to do, about 24-25% this quarter. We'll try and maintain that.
You made one acquisition, right? The Busy Infotech, I think so. Out there, I think margins have been a little bit lower because of higher employee cost. How do you see things shape up out there? Give us a broader guidance from there. How do you see this acquired entity ramping up from here on?
We are very happy with the Busy acquisition, the way it has turned out. I think Objective at the busy is to grow the revenues and grow the subscriber base, make the software more cloud-based, cloud-friendly and mobile-friendly, move slowly and slowly from the one-time licensing fee to a subscription kind of a model. I think the first year has not come with any surprises. And we don't worry about margins there. I think we are investing behind the growth. The good part is that it is not consuming any cash and continues to grow healthy. This year we should see even better growth coming from Busy.
Okay, I think the street is also quite convinced of that. It's up. The stock is up almost 7.5%, so they definitely like what you're saying. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV18. By the way, just a couple of outliers since we're talking about IndiaMart, which is up 7%. We have many other stocks. Union Bank is up almost about 3%. We'll talk more about that with the management later on the show, so do stay tuned in for that. And a couple of other names, keep an eye out on PVR. Big releases coming up later this weekend, so of course all eyes will be on that. And something like a Phoenix Mills coming back as well, ABB India, Macrotech Developers. So even in a falling market, there are some pockets that are standing out.
Oh yeah, I mean there are. It's not one way at all, and we've had a one-way market, but up. So it's not. 1,100 stocks are higher, 860 stocks are lower. I mean, yeah, so more declines than advances, but what's going up is going up on pretty strong volume. So just to add to that list, I mean, IndiaMart, of course, we just mentioned. Look at Tanla Solutions, Suzlon. I mentioned Shriram Finance, which has not been in, in the mix over the last many weeks, but now this morning it's up about 4% or so. IRFC, Newgen, I mean, big gains after the results recently. So it's up 3% this morning as well. Sterling and Wilson Solar is up quite strongly. Sanjeev Basin was talking about Piramal Pharma. That one is up about 3%. It's back at about 103. Talbros Auto. I mean, it's a smaller auto ancillary name, but it's coming up with volumes and it's done phenomenally well, by the way.
Because, Prashant, they announced that they're going to be considering a stock split on August 8th. So that was the reason
I think more liquidity, stock, I guess. So 828. I mean, this year the stock is up 45%. So it's just quite incredible what we have seen. Stock used to be, it closed 2021 at with I think 400 rupees, and it's at about 828 odd rupees now, so in a year and a half or so. I think we've got the management of Mphasis now joining us, and we can go across to them. They've reported a revenue decline for the third consecutive quarter. The decline was expected, but what they've reported is perhaps a little bit more of a drop as compared to what markets were expecting. Manish Dugar is Chief Financial Officer of the company, and he's joining us right now to take some questions. Manish, good morning. Good to have you with us here. Thanks very much. I'll get to margins in a bit, but let's just address that 3.5% quarter-on-quarter constant currency revenue decline. And what caused it? I think both in the BFSI vertical and the logistics vertical, things have been a little weakish. What are you seeing in the marketplace?
This was not unexpected. Combination of the volatility in the banking space and the mortgage business because of what's happening in the interest rate were kind of anticipated. I think the more important thing for us is the strong deal wins that we had, $700 million of contract closures. Over the last few quarters, we had seen that origination was kind of going strong, resulting in pipeline growing. Conversion of that into contracts and then conversion of contracts into revenues is where the delay was. The good news is at least the contracting has started picking up. $700 million was the record quarter for us. And we have also started seeing those contracts starting to deliver revenue in quarter as well. So as we go forward, as the backlog that we have built over the last few quarters and the contract closures that we have had now starts converting to revenue, we feel confident that that should give us strong sequential growth in the coming quarters in the rest of the year.
Got it. Nitin Rakesh is also joining us, Managing Director and CEO of the company. Nitin, good morning. Great speaking with you here on CNBC TV18. We don't get to chat that often, so good to see you. Just a quick word, Nitin, just to take off from what Manish said. Will we see improvement progressively from the second quarter onwards for the rest of the year? And how much of that is predicated on what's happening out there in the US? Especially, say, for example, on the mortgage side of things. Talk us through that.
Thanks, Nigel. Thanks for having me. Great to talk to you. And I think, as Manish was mentioning, the
we've seen some green shoots in at least the opening up of the decision cycle as it comes to awarding those deals. And then, of course, we've seen some early signs where conversion to revenue is also starting to at least get visible. It's nowhere near where it needs, where it needs to be from a normalcy standpoint. Specifically, I think the reason why we have called out for a base formation or a bottoming out in Q1 is linked to the fact that we've definitely seen some uptick in volumes on the mortgage side in some segments, especially home equity lines, diligence services, and increasingly in the due diligence space, as well as the capacity creation requests from customers as they expect these loans to start getting restructured. That definitely has, at least in our view, for now, put a line under the leakage that we had from the mortgage side of the business. I think the nature of the pipeline and the deal wins has also been fairly broad-based. So that gives us visibility into growth outside of top 10 and BFS. And that's the reason why we do believe that some early green shoots are visible. We do believe that growth will accelerate sequentially through the remainder of the year.
Okay, so early green shoots are visible and growth will accelerate for the remainder of the year. Nitin, hi, this is Sonia here. Thanks for joining us on the show. I have a couple of more questions on the BFSI segment, which has been hit this time. But before that, I wanted your thoughts on what happened with Infosys. Not so much because they speak about a slowdown in discretionary demand, but also they're talking about how deals are getting delayed. Is that very company specific, you think, or is this something that the entire industry is facing? And if yes, what would the read-through be for a company like Mphasis?
So, Sonia, I think, again, I'm not qualified to comment on, what's going on in another business. But all I can tell you is we did call out the fact that if you look at the 3 stages of the life cycle of a deal, origination actually has been fairly robust. We have been adding new deals to the pipeline pretty much through the last 4 quarters, and hence every quarter the pipeline growth was sequentially higher. However, the TCV wins for us were fairly flattish in the 325 to 350 range. What we've definitely seen an uptick in is the pace of closing of those deals. Some of them were obviously in the pipe. Some of them were added recently. A third of the deals were also AI-led, which basically means that that's definitely something that clients are very keen to continue to implement and expand on. So I think green shoots basically are visible around BFSI. There are segments of banking where demand is actually a lot better. Consumer, wealth and asset. I think mortgage, as I mentioned, is starting to see some turnaround. But there are segments of banking where the demand just isn't, back to normal or won't be for a while, because that's very dependent on the cyclicality of either the capital markets or the interest rate environment. So I think it's very nuanced, very specific to the domains you're operating in, very specific to the geographies you're operating in as well. We've seen good traction in Canada in the last quarter. That has added a 40 million plus deal for us, which is a big win for us in that region because we've been investing for the last 18 months in the region. We've seen good pickup in pipeline in Europe, but conversion is actually fairly slow. So I think it's definitely an industry-wide issue where you have seen slowness in decision-making and extreme tightness in existing spends and discretionary spends. So I think the scrutiny on discretionary spends or short-term spends has been really, really high. So I think that's definitely an industry-wide phenomenon.
Okay, that's an important takeaway for us, that it's not just Infosys related, but this slowdown in discretionary spends perhaps is an industry-wide phenomenon. Got that. Nitin, one more question, since you mentioned a lot about deals. The average large deal size in FY23 on the whole was around $60 million for your company, and that has doubled from where it stood about 3 years back. Just wanted to understand, where does it stand at in Q1 and what could it be for the rest of the year, the average deal size?
So I think, Sonia, there are 2 or 3 things that go into the size of a deal. Firstly, what is the service line? So we've done multi-tower deals. So we're not only doing, run, but we're bundling run and change. In many cases, there's ops transformation, or there is tech transformation, replatforming, cloud migration, or transformation included in there. So the nature of deals has become multi-tower, and definitely compared to 5 years ago or 3 years ago, the duration has definitely picked up for us because many of these deals require a 3 or 4 year transformation journey or a roadmap. But in the recent past, I think in the last 12 months, the durations held pretty steady, but just the number of deals has ticked up. This quarter, we had 4 deals over 100 million each, and that's definitely adding to the average deal size, so to speak. So I think very pleased with the fact that we are able to originate and close large deals. and they are actually across verticals, across client categories. We called out for the fact that significant proportion of the deals came from non-banking as well as non-top 10 customers. Of course, we did 2 large deals in banking as well this quarter, which is very, very heartening because that segment is really something that we are very extremely, of course, exposed to, but also looking for signs of a little bit more normalcy there. So I think very pleased with that performance. Very, very, looking forward to continuing to convert the pipeline that is also up at this point.
Nitin, this is Prashant here. And this is an unfair question, but I'm going to ask it. So up to you if you want to answer it. In another lifetime, you were also on the capital market side. A lifetime ago, actually. So I'm going to ask you to don that hat to tell us. I mean, for investors who are watching, with all that is going on in the US, uncertainty, there is, of course, throw in this AI mix as well, which gets talked about quite a bit nowadays. Is Indian IT a structural kind of story from where one will make money even from here?
I think you will definitely, again, I can't commit that I'll give you an unbiased answer because I'm invested in the sector and the segment. But having said that, this is not the first time we are seeing cyclical slowdown. This is not the first time we are seeing a tech pivot. We've seen that at least a couple of times just in the last 10 years, and we saw a pretty significant pivot starting 2000. So I think I have, of course, I'm part of the industry. I am very, very confident in the ability of our companies in the sector to continue to adopt and embrace tech and really stay meaningful to end customers. We have seen definitely massive investment being done by almost every large player, whether it was in the digital era, clouds, centric investments, and now, of course, AI-centric investments. And not to forget, we are also probably best placed on the planet as an industry to actually continue to give efficiency on both cost and productivity to our customers as well. So I think to me, this is a secular tailwind. We are definitely in a structural tech investing super cycle that will last not just 1 or 2 years, but potentially, as we call it, a decade for us to continue to play in.
Okay, that should be that's very confident sounding, and I think useful for investors to hear it from you. Thank you very much, both of you, for joining us, Nitin and Manish. Appreciate your time here on CNBC TV18, and hope to speak with you more regularly as well, Nitin. Well, 114 points lower on the Nifty, and I think the reason why the market's coming back once again is Infosys. Look at Infosys. It was down 9% and is down about 6% now. So there is a little bit of a bounce which is coming through. Utkarsh SFB is on your screen, and look at the listing which is coming through as compared to the issue price of 25. That's making its debut at 40 rupees per share. So that's a big one coming through. The management, some exchange officials up on the screen ringing the bell and bringing another company into the market. The IPO market, of course, has been super strong, for a while now. Infosys is what I was talking about. If you can have that up briefly, you'll be able to see and understand why the index, the Nifty, is recovering as well. 7%. Down from 9, it's down about 7 now.
Also, the Utkarsh listing is not bad. Given that today has been a weak day, right? The listing is not bad at all. It's listed at a premium of 60% compared to the issue price. And the company, has been growing its customer base. It's been present in the MFI sector for a very long time. It's been growing its customer base very well. And a lot of the internals of Utkarsh SFB have been improving with its cost of funds, whether it's, the CASA deposit ratio, etc. All of that has been improving quite a bit. And that's reflective in the stock as well. Let's do one thing. Let's get Mitesh Thakkar back on board to tell us how to approach the markets now. Mitesh, still down about 120 points. What's the technical view, and what about individual stocks? What are we looking at?
See, in the morning I spoke about the fact that closer to about 19,740, 50 explore long positions, we actually didn't get that level. About 25 points higher from there is the low. But I think this market, at least with this gap down, also hasn't disturbed the trend, I think, unless until we see a breakdown 19,700. So I think that view remains that broadly, after hitting or getting very close to 20,000 levels, some profit has happened, coupled with the fact that Infosys was a negative news flow which affected the index as well. But in case we don't break 19,700, then I think next few days could be spent within this range of 19,700 to about 19,980, 20,000 levels, about a 300-point kind of a range. And that consolidation should help us get past 20,000. So I'll watch this level very closely. Still attempt longs closer to about 19,750, 740 with a 50-point stop loss. And yeah, that's the index we brought in.
All right. And on individual stocks?
Yeah. So on the stock side, I think, National Aluminum and disclaimer, we have recommended to our clients, we have some positions as well. That is a buy with a stop below 90 for targets of around 98 on the upside. And the other stock which I like is Cipla, which is showing good continuation. So buy here with the stop at about 1040 for targets of 1085.
Keep an Mitesh, thank you. Keep an eye on United Spirits as well. It's at the high point of the day. It's a big recovery from the day's low. USL numbers were strong, but I guess the market was a little iffy. The EBITDA is some 30-35% above estimates, and I think that's making a comeback. 995, as I said. We'll take a quick break here. Quarter se quarter tak, our segment to focus on sectors as they report earnings, and we're focusing on the steel sector and expectations from the first quarter. Nigel will walk us through the expectations, and Amit Dikshit of ICICI Securities will be with us to talk to us about what he will make of the numbers. Stay with us.
All right, here's our special offering, quarter se quarter tak. Nigel will join in to tell us about what he's expecting from the steel sector. He's walked over to the big wall. Nigel, over to you.
Well, in the upcoming steel results, there are three key factors to focus on. One is strong volumes, lower steel prices, as well as higher coking coal costs. Let's elaborate on each of them in a little greater detail. Shipments of major ferrous players are expected to increase year on year, driven by growing steel consumption. Tata Steel India, well, the dispatches are 18% higher on a year-on-year basis, led by domestic deliveries, while exports remained a little bit subdued. Now, JSW Steel's India operation production also jumped by close to 10% on a year-on-year basis. Realizations, though, will limit the top-line growth, as prices will be lower by around 1,500 to around 2,000 rupees per ton, sequentially, that is, and around 15% lower on a year-on-year basis. This is due to the sharp rise in steel exports coming out of China and the weak global steel demand as well. That's what's put some pressure on global steel prices and reflected on domestic prices as well. Now, coking coal prices, they have corrected sharply, but costs could increase by around $5 to around $20 per ton, depending on the kind of inventory that the steelmaker is carrying. Running you through a quick snapshot of the expected EBITDA per ton by ICICI Securities. Tata Steel India EBITDA will come in lower by more than 40% on a year-on-year basis, while its European operations will continue to report a negative number on the EBITDA per ton basis. As the volumes were lower over there in the European business, that's because of the shutdown in the past quarter. JSW Steel, well, the EBITDA per ton could correct by around 27% on a quarter-to-quarter basis, while SAIL EBITDA per ton could come in lower by around 50%, both sequentially as well as on a year-to-year basis. They've also given the key stocks to track for their upcoming results season. From the metal space, well, on JSPL, they expect the best performance among major steel players, with the reported EBITDA per ton likely to remain flattish sequentially compared to a decline for the other players. For JSL Stainless, they're expecting the EBITDA per ton in excess of 20,000 rupees. And for Nelco, they expect the company to perform better than Hindalco, mainly due to the captive mining at the Utkal D coal block. Going ahead, the street is tilting towards ferrous in comparison to non-ferrous, as ferrous players could benefit from the improving spot spreads and also stronger traction in the domestic market. While on non-ferrous, well, the stocks could be under pressure due to market surplus in key commodities caused by subdued global demand. The key factors to track from here on, though, include domestic demand, management commentary on spreads, and let's wind this down then with a quick snapshot on the valuation parameter of the key ferrous players as well. But let's get in Amit Dixit then. I think he'll join us in just a bit. So, Sonia, back to you.
All right, thanks a lot for that. So that's what you can expect from the steel companies. As Nigel pointed out, we'll just touch base with Amit Dixit in a bit. But the stock of the moment is actually the new listing. In case you missed out on it, Utkarsh Small Finance Bank is having a rocking time. It's not a small move, 60% higher almost, and volumes picking up on that one. So day one is turning out to be pretty strong for Utkarsh Small Finance Bank. Apart from that, you have Piramal Pharma. Remember, Sanjeev Bhasin was also talking about that. Piramal Pharma up almost about 4%. But let's try and connect with Amit Dixit, the analyst at ICICI Securities, to tell us what he's expecting from the metal sector. Amit, thanks a lot for joining in. You just heard, Nigel put out the key expectations. But you tell us, from the universe that you cover, could there be any positive surprises this time around? Where do you see caution as well?
Yeah. Good morning, Sonia. So this particular quarter is a very atypical quarter, I would say. Previously, we have been accustomed to seeing steel companies reporting a very, very, similar, I would say, decline in realization or increase in costs. However, this quarter is a little different because based on the inventory that companies are carrying, you would see a differentiated performance. So to that extent, for instance, in steel, EBITDA per ton, we expect it would be down QOQ to the extent of 3,000 rupees on an average. However, JSPL would be an exception, where EBITDA per ton is likely to remain flat, adjusting for the inventory revaluation that they did in last quarter. So that is mainly because of the thermal coal cost that is lower for them, and that doesn't apply to other steel companies. Second point, as far as the realization goes, we expect Tata Steel to actually report a little bit of an increase in realization, that is around to the extent of 500 rupees a ton, mainly because of the contracts. So, and in iron ore, similarly, we expect JSPL, for instance, to report lower iron ore cost compared to last quarter, while some other companies such as JSW Steel are likely to report higher. Now, having said that, if you look at the from the pack, we believe that there are certain companies that would still show a differentiated performance. The one, Jindal Stainless. So we will see that the record EBITDA that the company did in the last quarter, there would be only a slight dip QOQ, mainly led by steady realizations, and EBITDA per ton would be around 20,000 rupees, in excess of 20,000 rupees, I would say. Nelco, another stock to watch out for, where the start of captive mining would help them in controlling costs despite lower aluminium prices. So these are the two stocks that we would see performing well. Apart from that, Shyam Metallics, of course, because of the capacities that have come on board. So, because of higher capacities, the volume would be up, and that would offset some of the decline that you would see in realization, notwithstanding that the company would also get advantage of lower thermal coal cost.
Okay, hi Amit. Good morning. Thanks so much for joining in. Amit, JSW Steel, after many quarters or many years, we're going to be getting the numbers at around noon today. They're in Tokyo, so that's why the management will be declaring the numbers out then. we have the expectations, but I just want to ask you, there were some reports a few days ago that suggested they're looking at that Canadian coal mine, which will help them in backward integration, but the valuation looked very large. How would you approach it if they're going to be raising $2 billion, to buy that 20% stake or thereabouts? Won't it further put pressure on their balance sheet?
Yeah, so we would get clarity on the con call regarding that particular potential transaction. At this point in time, I would say that the valuations that are doing rounds are steep. But the company wants to get hold of captive coking coal. The reason being that coking coal prices have been very, very volatile in the past. That said, balance sheet already on leverage, they are probably the highest on the street. However, we would like to hear more on the con call regarding the thought process behind this transaction and the value that they see actually getting unlocked.
And the report was indicating that earlier, the valuation that was being discussed is $22 billion. So that is going to be a very, very large number. Even if they have to buy 20%, it will come to around $3 to $4 billion. That will be too huge, right? What number will disappoint you actually? Either in terms of the quantum that they are buying or the total money they're putting on the table?
No. So currently, we don't have a great deal of details on the reserves, on the kind of plan that they have. So potentially, even $3 to $4 billion dollars would look cheap in context of the reserves that they have in store. However, on the face of it, I do agree that this seems to be a steep valuation, but we would like to get more on the drivers of this transaction from them in the con call today.
All right, Amit, we leave it at that. Thanks a lot for joining in and pleasure speaking with you. That's what you can expect this quarter in the steel sector. But let's get back to the markets now. There's no real recovery. The market is still under pressure, down about 150 odd points. And Infosys is still down about 7.5%. The other spaces that are under pressure are the leaders of the last rally. So whether it's something like a Polycab down almost about 5 odd %, Ramco Cements, Persistent Systems, PB Fintech also pretty weak over there. But it's been a solid set of Q1 earnings from Union Bank of India. Lata is joining in for that. Lata, over to you.
Thanks a lot for that, Sonia. Yes, solid is a good description of the Union Bank numbers. The return ratios are solid. 1% ROA we haven't seen in a while. Asset quality has improved. Net interest margin expanded. I haven't seen that kind of a 3.3 number in a long while. Mrs. A. Manimeghalai, the Managing Director and CEO of Union Bank, joins us. Ma'am, good morning and thank you very much indeed for joining us. I think one of the more impressive numbers is the deposit growth year on year and quarter on quarter. To what do you attribute this? I mean, not many public sector, even private sector banks have been able to report a deposit growth that is better than the advances growth.
Thank you, Lata, for the great compliment. Of course, the bank has been doing well in the last few quarters with regard to deposit growth, of course. And we had given a guidance to the market that our deposit growth will be to the tune of 8 to 10%. But then we have outgrown whatever we have given guidance to ourselves. But it will be a little moderated because of the base effect. The growth was, so sharp at 13.63%. But it will be moderated, and we are hoping to keep the deposit growth by 8 to 10% in the coming quarters.
But obviously, CASA has gone down for everybody. It's also a bit seasonal, I understand. There's a quarter-on-quarter fall in CASA, in the current and savings account as well. Do you see your cost of deposits going up? How did it do in this quarter compared to the previous? And what are you expecting in the coming quarters in terms of cost of money?
Yeah. If you look at the composition of deposit for the bank, it is, 73% is CASA plus retail, and the bulk deposit is at 27%. And as of now, our LCR is close to 161%, and so we are comfortably placed with regard to liquidity. Going forward, we will be seeing a little bit of increase in the cost of deposits. In the last quarter, we saw a little growth in the spike in the rate of interest in the bulk deposits. But I'm hoping not to bring in more of bulk deposits, rather than, look at increasing the low-cost deposits, especially the CASA growth is what I'm looking at. We are taking a lot of strategies and measures to see that the CASA growth happens in the bank, and we will keep it at low-cost deposits will be the prime growth center for the bank.
Okay. Well, the negative in your result really is the bad loans. I mean, it has come down, but even now at 7.5 or 7.34, the gross NPAs would rank among the highest in the industry. Is there any concerted effort to bring it? You know, the banking sector is going through its best phase ever. You know, 7 is a tall number for such a period.
True, Lata. We started the year, if you know, last year in March 22, we were at 11.11. That was my gross NPA, and we have brought it down to 7.34 now. The concern remains on NPA. The market is, almost 5.5. That's what the market is. But we have given a guidance that we will be around 6 and below 6 for the current year. A lot of efforts are, taking place in the bank to see that we reduce NPA. We have bought out, particularly verticals. We have got OSDL, that is a OTS. We are going very aggressively on OTS and the other forms of recovery also. If you look at return of accounts, recovery in return of accounts has been a major contributor for the current quarter also. And we will be considerably taking major steps to bring down the gross NPA numbers to 6 and below 6 actually.
Any expectations of recoveries, ma'am? I guess you all would have given the NARCL also some assets. You're seeing any recovery?
We have given close to about 10,000 crores is what we have given to NARCL. We have identified those accounts. And we have got last year, we have already given two accounts. We had already got some inflows. So we are seeing, we are constantly in touch with NARCL, and we hope to see some good improvements in the numbers even this quarter. And likelihood of 8 accounts are in advanced stages of discussion, and we hope to see some good offtake from the NARCL numbers also.
Okay. The other point I wanted to ask you is about OPEX. OPEX is up 12%. Now, do you see any a scope to reduce it? Primarily, have you all been able to rationalize branches? I remember speaking to Bank of Baroda, and they have brought down their branches. I mean, I cannot remember the exact number, but about 5% reduction in branches over the last 2 years because they had, common branches with the banks they took over. Could you make any such rationalization? Are you seeing improvement in costs?
The operating expenses, if you take into account in the bank, it is mainly because of the salary revision that we have made provisions and the pension provisions. That's the only hike that we have seen. That's the reason the operating expenses looks a little higher at 12.38. With regard to your next question on rationalizing of branches, of course, the bank has done a lot of rationalization. We had close to 9,200 branches when the amalgamation started. We are at 8,400 branches. We will be reducing further. In the sense, I can tell you that we will not be reducing the number of branches, but creating, specialized branches out of the branches that we already have. And moreover, we are having also rural branches. We will be going in for more of BC-centric branches there, or instead of the brick and mortar branches, we will be looking to go growing in the fixed point BCs. That's the way we will like to go to branches expansion. We are seeing growth in certain pockets. If you look at my branch network right now, 59% of my branches are in the RUSU areas and 41% of the branches are in the metro centers. So RUSU are the branches where, we'll really look at growth centers for the current quarter also. And I'm well equipped on those locations. And with a BC network of almost 17,000 BC network, I hope to grow in those locations also.
Okay. So cost to income ratio that's fallen, which is, a very big positive, 43.66% at this point, a big fall from year ago levels. You see there is more scope?
No, I don't see much scope in reducing the cost to income ratio. The cost to income ratio was bloated a little in Q4 of last year, and because of one-time provisioning that we made on family pension. So going forward, we will be looking at, the cost to income ratio to the extent of 44 or, to the tune of 44 or 45. That's the one that I'm looking at. But we are taking a lot of measures to reduce the cost-to-income ratios. As I told you also that we will expanding in the RUSU areas with fixed point BCs. And there are so many other measures the bank is taking to see that the cost-to-income is, kept to a level of 44 or 45.
Okay, I'm assuming by RUSU you mean rural and semi-urban. It's not an abbreviation which all of us viewers understand. But let me come to, what is your SME one, the loans that are 30 days past due and 60 days past due? How is it trending? And therefore, what's the year-end NPA likely to be?
My stress portfolio is to the extent of about 0.51% as of now. And we are taking a lot of measures to see that my SMA position or the stress book does not slip into the NPA position. In the MSME sector and the, you can say that the retail loan, there has been a little bit of stress. But then, the kind of approach that the bank is having with regard to maintaining the stress assets, it is quite comfortably placed. And even in the quarter, the slippages in MSME book was to the tune of about 700 crores and retail to the question of about 500 crores. But I'm hoping that this will be, at least to the extent of retail loans, I'm sure that we will be able to make good recovery because this is totally mortgage-based, so we will be able to have a recovery. MSME is about 766 crores is what we have slipped in the last quarter, and there also we will be having considerable recovery. We are using a lot of efforts, like we have regional collection center and the zonal collection centers. We also have a subsidiary called the UBI subsidiary who also help us in recovery and maintaining the stress of the bank.
Okay. Two quick numbers. Therefore, do you still expect a further fall in your credit cost? Because you're saying that your stress book is under control. And secondly, is this NIM your best? You have a net interest margin of 3.13. Does it go back to 3 or does it go to 3.2?
It will be at around 3 is what I'm hoping. It will not, 3.13 was a good number, but we will be maintaining at 3. And as regards the stress portfolio of the bank, we would, last year if you look at, every quarter the slippages was to the tune of 2,500. Only in this quarter I have seen a stress of about 2,500 crores. And because here there was an issue because the two of the corporate books had fallen. And so the RAM sector is doing well. And I would like to keep my stress book to about 2,000 to 2,500 crores every quarter.
Okay, finally, loan growth. What were you expecting and from where will the growth come?
Loan growth, see the GDP is growing at, estimated GDP growth is about 6 to 6.5%. So accordingly, we have also, seeing a growth of about 8 to 10% in the loan book. And the RAM is supposed to be growing good on all growth we are seeing in the RAM sector. And especially if you look at my RAM sector, I have seen good growth in the education loan sector, which is almost like 33% growth. Gold has grown by almost 53 to 54%. And in the large corporate, I am seeing growth in infrastructure, steel, pharma. These are the sectors that I am seeing real credit growth.
Okay. I would assume by RAM you mean retail and MSME. Again, we are weak on abbreviations. Thank you very much, Mrs. Manimeghalai, for joining us with your analysis of the current quarter gone by and the outlook. We are winding down on Bazaar on the note that the sensex and the nifty are sulking, threatening to even go below the 19,800 mark, but it will be only for perhaps a few hours. 20,000 can't be that elusive. Wrap up on Bazaar on that note. Short busters up next.